following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
Good morning, everybody. Welcome to NinjaTrader Live. It is May 3rd, 2024. Happy Friday, everybody. Joining me live from Long Island, New York, the incomparable Tom Snyder, Chartered Market Technician. Tom, good morning.
Good morning, Jim. Yeah, and a great morning it is. How you doing?
It's a beautiful morning. It's a fantastic morning. You know, we had a great week. We had a lot of stuff happen in the markets that really provided some opportunities and some risk. And we're not done yet. You know, Friday morning did not disappoint. The weather's nice. The Kentucky Derby's around the corner. It's a glorious, glorious day.
I completely agree. I grew up, the Kentucky Derby weekend, the Saturday. We always had a big party in my family. As a kid, you learn that first Saturday in May is just a great day. It's usually sunny where we grew up. Rarely was it raining. I just remember blue skies, sunny. You watch some baseball, maybe you play some baseball, maybe, and then at the end of the day, you go have a party and watch some horses run. It was great.
Yeah. Well, and I hope Mike Burke's not listening, but my party might start at 12:01 today.
Right, because we have the Oaks before the Derby.
Yeah. In any event,
like
great day today. Appreciate everybody being here today. Let's get right into it. Let's talk about the economic releases because we got hit hard and fast with the employment situation, aka non-farm payrolls.
Yeah, a monthly report, and usually is closely watched by all the markets. Not a lot happening today, though, other than non-farm payrolls. Really, 8:30 a.m. I'm just going to run through everything else. We'll come right back to it. 9:45, we have the PMI composite final and the ISM services index at 10. So, a couple more reports that we might be watching out for if we're trading. 9:45, 10 o'clock. Just be careful around there. And then the weekly Baker Hughes rig count. If you're looking at the energy market, specifically crude and derivatives, you'll take a look at that and see the trend, but it's not going to be a number that surprises or shocks or moves the market, I think. But let's talk about the non-farm payrolls, the employment situation.
Yeah, I mean, Tom, I've been complaining about the consensus range for 3 days now. The low end was 190,000. The high end was 303,000, which was what it was last time. It comes in even lower than the low part of the consensus range, which was 37% down. It was 175,000, right? So kind of a weak non-farm payroll number, that headline number, and that could be, bad news is good news.
Well, you're right. I think, it's interesting when you have these reports that show such variance in the range. It shows that it's not an easy number to peg. And then when it comes in outside of that range, it just kind of, proves again, well, this is not an exact science, right? This is all the different analysts have their different ways of trying to see what that number is, and they can get it. Even the ranges can get it wrong, right? So, but I think you're right. I think bad news might be good news, but it also kind of fits into what Powell was saying on Wednesday, right? It kind of fits that narrative where he was really, really reluctant to talk about hiking rates. They're data dependent. It's almost like, did they kind of know what was coming because, they didn't talk about hiking rates. They didn't talk about that scenario. Why? Because they knew that this number was going to come in this way. And that's what they need to start cutting rates.
Yeah, so that's interesting. So if you look at the core average, I don't know how they figure out the consensus number you see on TV. That was 240. That was way off.
Right.
Powell gives this really cheery testimony, right? I'm calling it really cheery testimony. And I would argue that maybe they don't have the Bureau of Economic Analysis final report, but their ability to I'm sure that there is an awful big payroll of economists in-house that are able to kind of do their own analysis and projection of what this number is going to be, and they're pretty darn good at it probably. So that might have something to do with it. I don't have my tinfoil hat on now, but maybe they had a little inside information. I don't know.
Yeah, you're right. It could be their analysis just is a different way of coming about the numbers. There is thoughts that Powell was uh, kind of dismissed or poo-pooed stagflation, right? And you got all the armchair economists, maybe some real economists coming out and saying, well, how could you not see it's stagflation? And then this report comes out. So this is kind of what they needed, right? You needed a little bit of a weaker labor market instead of
Yeah.
hiking rates, right? Because you want prices to come down so that you can cut rates. And how do you do it? You either hike rates to get rid of inflation, or you weaken the labor force. And this is kind of in that second camp.
Yeah, no, for sure. And if you look at the unemployment rate, ticked up a little bit. Stagflation years, unemployment was 6, 7, 8, 9, 10%. I'm not worried until we get to over 4.5% on that unemployment number. So things are looking like a Goldilocks report for Chair Powell today.
Well, good, bully for him, as we say, right? Bully for him.
For sure. Well, the one thing though, let's not sit, be on our heels here. Don't forget, 9:45 PMI is a big deal. ISM is a bigger deal at 10 o'clock. So, be careful as you're positioning your trades going past into and throughout the opening range.
For sure.
All right, let's take a look at the charts. We caught a bid on the stock index futures. I'm going to toggle over to the mini S&P first, only because this is the sequence. If my chart decides to move, this is the sequence that my brain works better at.
Right.
To the extent it works better at all. So right now, Tom, I'm going to drill in here. I have a weekly. That's why I added weeklies. Let's talk about it. I added weeklies. So what do you make of this weekly? I mean, this is like we're almost recovered from this big benchmark candle we had 2 weeks ago, this big April 19th breakdown. What do you think?
This just looks kind of neither here nor there. This week looked pretty bearish up until, I guess, today, maybe Wednesday, maybe. I don't know what part of that hammer is when it was lower. It might have been going into Wednesday, or it might be recovery from Wednesday with today. But certainly in and of itself, this little hammer is fairly bullish, right? Because buyers push this up, and it pushed it up above both of your VWAP levels, correct?
Right.
At the bottom, at the top, and your 8-period moving average, your 8-week moving average. So certainly that's a strong move this week, right? It's kind of saying, look, all this news is but past us now. Maybe we can get back to the job of a rally. So that's what it looks like. But we still have a ways to go, because we haven't, like you said, taken out the top of that candle 2 weeks ago.
Yeah, that baby right there. 52.12.5. Let's go to the daily chart and see if it looks any different. We have a nicely fitted, although maybe not proportionate, hot hamburger bun here. We're right up against an area of resistance, 51.48 1/4. You could round it up to 51.50 if you want, but we still need to kind of break through that level here.
Yeah, exactly. I mean, and that's kind of encapsulated in this current bar, right? We saw the top of the weekly bar as a really thin candle, right? Or thin body rather. Well, that makes sense, right? Because if we go back to Monday, it's about where we open. We're just above where we open. So all this behavior, that down day on Tuesday, kind of stop the bleeding on Wednesday, and then turn around with a thrust up today, kind of continuing that trend. That's a really interesting interesting pattern because generally what I've been noticing is Fed days usually are followed through the next day. That's not what
Okay.
happened here. But, maybe it shows the strength of where the market is going.
Yeah, very possibly. We have that anchored VWAP here. We're right up against it. We have the longer term VWAP a little bit lower. We have a crossover in the making of the 8 exponential and the 20 simple. We haven't crossed yet. You can see that red exponential is still a little bit lower than the 20 simple. I should probably change it to 21 because Mike uses 21 and that might matter. I don't know, but close enough. And so that's what my eyes are on, that cross.
Yeah, and that cross may happen if we just go sideways for 1 or 2 candles, right? Because you got the 8, the 8 and the 20, 21, those are pretty close close values creating that moving average. So if we do get that cross, that just might be an extra benefit that might elevate the markets if people are looking at that cross.
Yeah. Let's keep moving. NASI. Real similar, but different. Well, it is, right? I mean, I know that's the dumb thing to say. I withdraw the comment, but we have made a higher high on this target wick.
No, I laugh because similar, you're correct. It's similar. It's not the same. Similar is not the same as the same. So saying it's similar but different is actually really, really good observation. If you had said it's the same but different, that would have been, okay, Jim, what are you talking about?
I don't know. Yeah. Anyway, we're into the area of resistance right now as we speak, as we're approaching 18,000, which again, that'll be an interesting level if we achieve that today. But we're already up almost 275 on the NASI, but just pretend we're not, because we could be up 575. Who knows?
Well,
but
let's just talk real quick about NASDAQ because last night, Apple, after the close, reported earnings, but I think more importantly, they announced a buyback and not a small one.
Yeah. Yeah, and they announced dividend payouts. Hey, let's talk about. Oopsie, sorry about that. That's my cheat sheet. Brought it over. Wrong cheat sheet. Yeah, let's talk about it. So their earnings, their EPS was a hit, right? 1.53 estimated was 1.5. So the forecast was pretty tight there, right? But it wasn't a miss. Revenues were pretty close, but a beat, right? 90.75 billion. That's a little less than the revenues at the Kegney household. I mean, a little more.
That'd be awesome. I'm coming over if it's a little less.
No, that's a little more. Everybody would be invited over if it was a little more. And it broke down, the report broke down the different categories, right? Between iPhone and iPad and Mac revenue. And they have this category called wearables, home and accessory. What is that, Tom? What is wearables? Is that the Apple Watch?
I think it's maybe the Apple Watch, maybe those Apple glasses, right? The $3,500 VR, things you put on your face. I don't know what you call them, but I think that's what a lot of that is, because that was their big product they announced, I think, at the last expo last year or whatever. And I don't think it's been as big as a hit as they thought it would be, is what I heard.
Well, let's talk. What are these virtual reality? I don't understand them. I don't. I mean, if they're expensive as could be,
right?
But what do you do with them?
I think first of all, you put them on your face.
Yeah.
And it changes what you see so that you're in a different world, I guess. I don't know. I mean, for gaming, it might be a lot of fun, right? If you're playing tennis, or if you're playing, what I heard was maybe they can put you at the, right in the middle of a basketball game, right? I don't know why you'd want to do that. I keep coming back to Jurassic Park just because we can do something. Did anybody ask if we should do something? Like, hey, that's cool, but is it $3,500 for the hardware? Cool, right?
Yeah, I don't. I could bear virtual reality world. I could barely deal with the real reality world.
Right.
So
Right.
I don't have one of those. But anyway, I don't know. Maybe it'll turn into something even super cool. But the price point's still pretty brutal.
Right. Greater China revenue, the revenue came in forms of different places. China was bigger than expected.
Mhm.
And total operating expenses were a little bit higher, but I think the big deal is $110 billion worth of shares are being bought back. So, and then of course the quarterly dividend is increasing. So that that shows sign of maybe, Apple just is sitting on cash, right? And what do you do with that cash? Well, you can put it back into the company, but you can only do that so much, right? If what else are you going to invest in, and
Yeah,
develop and all that stuff. So
yeah,
one way to boost your share price is to buy the stock back.
yeah. Pretty awesome. All right, let's keep rolling here, folks. Let's go to let's see. Russell 2000 is rocking. We broke through a kind of important area of resistance, and we talked about this at bars closing yesterday. We were anticipatory of this, but maybe not to the extent, right? And then from my retracement here, we're really getting close to that 62.5%. Close above that, we could be off to the races for the Russell 2000.
Yeah, this is just follow through, and most of it, I think it's that idea of, if the Fed is going to cut rates sooner than later, Russell gets a boost, and certainly it's the up there with the Nasdaq, about 1.65% up today. So not shocking that it's the biggest gainer in the stock index futures.
Yeah, and I see a series of shelves here as well. So I'm just going to put a couple more rectangles a little bit higher, areas of resistance, just kind of as a measure of potential, right? So
Yep.
we're right up against this next one here, and then really the ultimate one here is we close above that 62.5. Anything could happen. So Russell 2000 is doing a Dow. Let's talk about the Dow, Tom.
Same kind of thing, right?
Is Apple in the Dow too or no? I can't remember.
It's a great
It's all right
question.
if you.
I
Yeah,
don't.
mission controls all over this probably. Hint, hint. But in any event, go ahead, continue.
Yeah, I don't recall. Um,
I don't know. Someone in the audience will know this. If you guys in the chat know this, let me know. Is Apple also in the Dow? And it could be.
oh my gosh.
Anyway, breakout happened here too. Again, this is similar but different, right?
I don't see Apple in the Dow. Yeah, breakout, right, similar but different. Not quite up to that 62.5% level on the retracement. So it's looking like a kind of the breakout coming a little bit lower than the Russell, and not quite as extended, but certainly that idea of shelves that you had on the Russell, I think
Yeah,
applies here. So, that rectangle you have now, there's another
yeah,
one right at
yep.
62.5% or right above it. So,
Look at
um,
that. Look at that beautiful. That's a
yeah,
beautiful rectangle right there. All
yeah,
right. All right. We'll see. We could do it. We could do it. I don't know. We'll see. A lot of data still. That's funny because we get a little euphoric when the data suggests, data results in, these equity markets rallying, and then we're not so euphoric when they go down, which shouldn't matter to us, right? We can go long, we can go short. We don't care really.
right.
Gold's not reacting so much. We have a kind of a nice descending triangle, I'm going to call it. And I also discovered, Tom, the NinjaTrader's ruler.
Oh,
I've
yeah.
seen it before, but what I did with the ruler, I drew my rectangle, my area of support, right? And it's approximately at 2296 ish, give or take. And then I decided, well, let's draw the ruler and see how long that area is held. And it tells me, right? I could just I click it, start to finish, 30 days, 30-day area of support right now. Which is pretty long period of time.
Yeah. Yeah. It's what, 6 weeks, 30 trading days.
Well,
I think. Is that true or no? No, you're right.
Let's
No,
see.
it's not. It's actual. That's interesting.
Yeah.
It's 30 actual days. It's 22 bars. So it's just over, it's a month. It's 1 month
Yeah.
it's held that. What's great about that ruler is it gives you all the different directions, right? It gives you the Y value, the X value.
Yeah.
Love it.
Right. And I made it a straight line, so there's no X value there, but
Right,
I did
exactly.
that. Just
But
right.
you click anywhere on the chart, 2 points, it'll tell you its distance in the X direction, distance in the Y direction. Very simple, but very effective
Yeah.
for measuring. Yeah, gold, I think, this is interesting. Gold at the release this morning did what the stock market did. It jumped, but now it's come off. And I was curious because I thought, well, if the stock market is getting a little bit of a bid, it's a risk on situation. So the flight to safety markets should get a little bit of a pullback or go the other way. And it didn't right away, which was fascinating to me. Now it's kind of fallen into line and you don't see, you could see by the big seller wick, markets come back again. So, interesting to see how the emotions that happen when these reports drop, or even the algos, right, trying to take out the emotion, react, and then where the market ends up 10 minutes later, 20 minutes later, 30 minutes later, an hour later, and it kind of might change your way of thinking a little bit.
Yeah. I agree with that. And I also love this pattern here, this descending triangle.
Oh yeah, that's great.
That's so yeah, the base of the bottom of it, the bottom of the triangle is right here at 22, the top of my rectangle, and then the hypotenuse, I think this is the hypotenuse, is that right? Is this kind of target wick all the way down.
Yep. What I also see, Jim, is a diamond pattern. And that's generally a reversal pattern. So what that means is in that triangle that you've formed.
Yeah, I'm going to delete these lines just so you can see it better. I see it too. It's a 5-day pattern, right?
Well, no, I was going to go, the top of the diamond was the top of your triangle,
okay.
right? So
okay. Just go down like
kind
this.
of, yeah, I would go see where that lower wick is that you've circled.
Yeah.
So it's a hard one to draw, but that would be the bottom of the diamond. You've got the top and the bottom of the diamond.
Okay.
And
I think
so
I got it. I wrote it down.
I'd move that up.
Do you want to go here?
No, I'd go up 4
Okay.
bars previous to the high.
Oh, okay, over here.
Right. Go one more.
Okay.
No, go to the left one more.
Okay.
There we go.
All right.
Right. And then if you were to join that high to the low, that's circled, and basically what it's saying is, even though we were making new highs, we kind of explored the bottom. Yeah, I go to where you put the other point at the top, right? So now you would just draw 2 more lines kind of to the left somewhere. And that is a reversal pattern. So when you're in an uptrend, you want to see like higher highs and higher lows. We didn't get that. We got kind of this pullback before we resumed. It just is a weak thing. And that's a reversal pattern. So in your descending triangle, that you had, you could kind of say, well, there was a little bit of a reversal pattern there, kind of reinforcing your descending triangle.
So it's kind of like a medium term confirmation that there's a move afoot.
Right.
Yeah.
Yeah.
Got it. All right, let's try to get one more in here real quick. Crude oil. Whoa, where the heck is crude oil at? Head and shoulders in place still, folks. So we've kind of settled down a little bit. We've got a nice area of support here, 78.93, where my crosshair is right now. Measured move may or may not happen right now, but things have kind of settled down with the baby candle so far today.
Yeah, and this could be anticipatory because next week OPEC Plus meets. So there will be information coming out of that meeting. Most definitely, right? It's just a matter of what is that information, and will that be bullish or bearish on the market? Will it be upward or downward pressure based on their outlook? Let's call it outlook.
Yeah. I'm with you. I'm with you. You know, and it's leaky, right? OPEC Plus is leaky. Like you get all sorts of leaks before the actual announcement.
Perfect way to describe an oil
Yeah.
cartel's meetings. Leaky. By the way, Jim, I just want to give a special shout out to the first in the chat. We could do that right now. Maybe
Let's do it. Yeah.
give a special shout out to Tracy Stone and Jen P for being the first ones in the chat. We have chat at YouTube and at ninjatrader.com/events. So Tracy and Jen P, you get special shout out for being the first ones in. Thank you very much.
Appreciate you guys being here in the first to chime in. That's the time. That's the most important thing we do in the morning.
You're right. You're right.
Thanks for being with us. We greatly, greatly appreciate it. Well, let's go ahead and take a really quick break and we'll get right into the opening range.
Awesome.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets and access over 40 built-in indicators plus custom indicators all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
On 3.
It's old.
It's
All right, we're back, everybody. By the way, we do have confirmation. Apple is in the Dow, which is something we should have known. It replaced, though, here's what I didn't know. It replaced AT&T in 2015. Could you hear me now?
Yeah.
That's awesome. So anyway, I know all things lead to back to the iPhone with AT&T for me.
That's right.
So I'm gonna upload. I could, I'm eligible for an upgrade time, and it's not going to cost me $990. That's what AT&T tells me. I'm eligible. It cost me $30 a month for the rest of my life, but
Yeah, I think you pay more when it's financed, right?
they say 0% APR, which is interesting. Which tells me that the product is overpriced in the first place.
Or read the fine print. There's usually an
Ooh.
asterisk, right?
All right, I'm going to look for that asterisk. Bitcoin right now, Tom, trying to rally with everything else. We had kind of a 2-day area support, not that significant, but it was a 57,000 print. Now we're back up to a 61,000 print, and we're bumping right up against that 8-period exponential moving average.
Yeah, I thought those closes below 60,000 was fairly bearish, right? I thought we were going to see continuation down to that consolidation level. If you look left, right around 52,000, 51,000, where we just sat there for however many days. But yeah, it's getting a little bit of a bid. This news today is kind of rising tide lifts all boats. But really what it is I think dollar weakness, right? So we see currencies are up, Bitcoin is up. For a little bit, gold was up, stock market's up.
Oh,
yeah.
Look at that yen chart. The yen's fighting back.
That's right.
So, not only did they intervene twice, but they had an assist with the numbers today. So they're, the Bank of Japan and the Ministry of Finance in Japan right now, they're starting their evening. They're doing cocktail hour right now. Look at that rally.
Yeah. I think that, yeah, exactly. Right. It's a double whammy. It's a double boost, if you will. The question is, can it sustain? Right. And, I think what's really interesting about that daily chart, though, is look how far back the open was today. The session open below yesterday's close. Like that's a pretty big retracement. It's almost like a dark cloud cover, right? It was trending almost halfway back, halfway the size of that body. And then of course
Yeah.
we know the report just boosted it. So unusual, you don't usually see two green candles where the low of the next candle is well within the body of the previous one. But, result is the same, an up day for the Japanese yen.
Yeah, all the currencies are up versus the U.S. dollar today. That's not surprising. So I think let's just really quickly, 30-year Treasury bond should get got a big boost today. We're up over a handle, which is more than 32 ticks or 1 point. We broke out of this area of resistance, and a little bit of a seller's look at the top. We'll take a look at a 10-minute chart in a second, but still a long way away from my anchored VWAP, but moving in an upward direction as yields. I mean, I think yields took a decent hit today. The 10-year yield is being measured by the CME Group micro yield contracted 4.47. The 2-year at 4.73. We still have that 25 basis point separation, but those two took a big hit. Let's just kind of look at the 10-year yield real fast.
And the 2-year almost got to 5, I think, earlier.
Yeah,
maybe earlier this week or last week. So we're 25 basis points off, which is good.
Yeah, that's a big move down. I mean, right here, I'm just, I added the daily 2-year yield chart up here right now. Remember, this is going to look a little different than the cash yield you see on TV, right? Because it's a futures contract, but this is a pure yield. So it's a pure price. And I can't remember the phrase that Craig Buick used, but yeah, we ticked over 5, Tom, a couple last week.
Yeah, on the 2-year. Maybe I was thinking of the 10-year where you were going. It almost got to 5, but regardless, those were levels that seem to be pretty. Maybe I was thinking of the 2-year, but regardless, same thing. Kind of you see that that big candle, that dominant candle in early May.
Yeah.
Right. That was kind of an elevation.
This one right here. This is
exactly.
March 10th. Is that the one? Okay.
Yeah.
I'm sorry. April 10th.
Did I say May? Yeah, April.
Yeah. My bad.
I think.
And I tried to correct you by saying March. So we were both,
Yeah, it was split. Yeah, we're splitting the difference. We got it. April. I look at the 2 candles before that as maybe a target for the 10-year, right? Go to the tops of them, right?
So wait, right up here?
Yeah, I think that's a decent target. We almost got there, but that seems to me like, look at what resistance that was before, right? It was touched.
Yeah.
It was
closed
right there. It touched the next bar before it finally broke through. Well, maybe we'll see some support here before we break on down if that's the way the market goes.
All right. Well, let's go to the opening range 10-minute charts, Tom. We have a great group of people with us today on a Friday. You could take a long weekend, enjoy the weather, but know you're with us today. That is outstanding. We really appreciate that.
Yeah, Jim, I'd be there with my racing form, right? On Friday before the Derby, take a little time in the morning, look at the the sheet, but here today with us, though, they're not doing that. They're with us. Raleigh, Anthony P, Paulie H, Turtle James, Eric H, The Lieb, Olive Mejia, Aviator, Simon W, Scott K, Todd Buckaloo, Stephen Rios, Brandon N, Mark R, Hitta, Mom and Dad Cags, good morning. Thundering Trades. Wow. I want to hear about your trades, Thundering. Dam, DAM, Nola Boy, Foggy Cape, good afternoon. Anissa, Byron P, Elizabeth Zula is here. Cosby is back. Okay, now I'm going to get this wrong. TR4 GIC 1. I'm sorry, GIC 11. Imran Alam is back. Minnesota Gecko, Lewis H, Jim, Jack Spar 01, Nicole Dixon Scott is here. J-Man 2005 in Las Vegas. Carlos, New York Yankees. Deepak, Michael Crump, Jeanette, Robert W, Tony Lyons, R. Crawford. Big in Texas is here. And that's what I hear about Texas. Everything's big in Texas.
Wow, what a great group. Appreciate you guys being here for sure. Good morning, Mom Cags. I'm a little bit jealous because you're going to get to see offspring number 1 before me. And he is looking forward to the famous Joyce Cagg spaghetti dinner tonight.
Oh, sounds delicious.
I know. I know. I know. I wish I was there. In any event, thanks for coming, everybody. This is the E-mini 10-minute chart, and there's a lot to unpack here. And I'm going to start, Tom, with the lows of the day right at that 5,100 level.
Yeah, right. 5,100.
Yeah. And, point of control almost at 5,150. That's 50 handles. That's 50 points.
Yeah, well, anticipatory is kind of, what that looks like, right? So you're looking at before the 8:30 release, you were looking at, 12 handle range. It's nothing on the E-mini. It's nothing. And the question is, which way would it go? And what's interesting about this release? This is not a long wick on that 8:30 bar. Not at all, right?
Let's see. All right. I'm sorry. I was looking at I was thinking, all right, let me go back. I was thinking, so this bar right here, Tom?
Yeah. The market knew which direction to go, right?
Yeah.
We got a print outside of the range to the low end, and it was like everything is in sync. The market knew that bad news is good news.
Yeah.
Fascinating.
Yeah. And not only that, I mean, look at the breakout trade potential here. I mean, it was 5,100 on the bottom. You had previous sessions highs on the top. That was resistance. That was resistance for the whole session up until the release of that number. So that was, there was probably some breakout trade happening in front of that number, which is very dangerous, by the way. But if you were trying to get long above previous sessions highs, you would have done okay. You would have done more than okay.
Well, and this is where that volume profile really gives us insight, right? Look at how above that previous high, yesterday's high, there's a little bit of volume there.
Yeah.
Right. So there are your breakout trades. Those are the people who got filled, resting orders sitting there.
Right there.
Those are the people who got filled. And how far did it go? It went to 51.18. So 5 handles, whatever it was, breakout area from yesterday's high. Okay, great. And then what's above it? Nothing. Nothing. Look at that. Nothing till you get where? 51.40, right above R1. R1 started filling those orders.
Yeah, right here. So I drew a little area of price unhappiness or weakness. Right. This move happened so quickly. There was very little volume from the breakout, right? Very little volume from the breakout. So now we have a double. This is probably the most clearest example of a double distribution on a volume profile, market profile, any kind of profile. We have this upper, distribution. It's very Gaussian, very bell-shaped. We have this lower one. It's kind of light gray. You can't really see it. And then you have the toothpick in between. And so this is really, so basically the pricing of this market, the paradigm has shifted up. The reason I drew this highlighted area here, this, with the region highlight tool, we call it, that tan area, it just kind of really helped me with, hey, what are we talking about now in terms of support and resistance? This is a keen area right now. Will we fill volume in down here or not is the first thing that crossed my mind. And then I look at R1, right? R1's at the top of that thing, and R1 could really play an important role.
Yeah, and look at that VWAP. That VWAP is like racing to meet the price, right? And that's what happens when you have so much volume, in one area. That, in this case is such a different location because of the news. That's not unusual.
Yeah. So this first 10-minute candle is going to be interesting. We'll see how the whole opening range plays out. But right now, I'm uncertain. I am totally uncertain about what's going to happen here. And don't forget, 9:45, boom, we got another important number. 10 o'clock, boom, we have another important number. So let's move around the cabin a little bit, Tom. Micro NASDAQ, same double distribution.
Yeah, but not getting the pullback that the E-mini is getting, right? It's still above that. Well, what's interesting is two things. One is the overnight trading keeps the point of control at the lower end, right? Because there was so much trading even after uh, uh, the 1 hour, 4 to 5 yesterday break, continued trading. Asia comes in. Oh wow, Apple's got great earnings. We gotta trade the Nasdaq futures, et cetera, et cetera. And so there was enough volume down there because of that activity, so that when the market opened up today, it's taking a while to you still have a double distribution, but it's taking a while to have a new point of control. And if there were the point of control up here, which we don't have yet, this market is still above that competing point of control. So, even though we might be seeing a pullback now, I think this is a little bit more bullish than the E-mini S&P.
I agree with that. And it's when you have these double distributions, the story, there's two possibilities. Possibility number one is, this is the bottom, this is the low of the day around R1, and we're going to be trading kind of cyclically around this new point of control that's up here, this new volume distribution here. There's another camp that says, no, this volume is going to fill in between now the official point of control just leaped up as we spoke, but this volume between the two are going to fill in. We'll find out as the day goes on, but right now for this particular market, it's looking stronger than weaker, and that fib line is not even giving us a clue.
I agree. And when it's such a big volume void that you've identified, I think it's actually harder to get back down there on a news event like this, because this is almost a reset. This is new information that really moved the market. Not a lot between there. And the profit taking, how should I put this? The buyers down below, there weren't buyers on the way up, right? If there were buyers, they were higher. They were at the new level. Maybe the squeeze, if the market does turn around, maybe it'll accelerate. But I just think it's harder to close that gap like this.
I'm not gonna say I doubt that at all. I mean, that's what I'm leaning for right now. I mean, look, we have 18,000 up here. That's in play. R2 is in play. We're about to break out to new highs here in the micro Nasdaq. This is looking pretty darn bullish. We have the hot dog bun pattern already, and then some. Look at that. Big candle, big green candle, big, equal and opposite, maybe even bearish engulfing, and then boom, a turnaround here. So 8 more minutes left for this candle to finish, but we'll see if this area holds as resistance. I'll draw a rectangle just for fun, or if we're just racking up. Let's real quickly just take a peek at the Russell. Russell's up 31. That's same thing, exact same picture here. R2 is in play though for the Russell. R2 is just kind of sitting there being like, all right, we could have some orders here, folks. Right there, R2. We'll see if that holds a support or not, or if it acts as a pivot back down. But to Tom's point, it's looking strong.
Yeah. Russell is up, not as much as the Nasdaq anymore. I think that Russell is kind of coming off a little bit. Let's look at the Dow. I think the Dow has an interesting shape.
All right, let me get my charter going.
So the Russell or the Dow pulled back to R1, which is interesting. R1 held this nice support there, and now it's turned around. Right, it's turned around and is trying to make it back to the highs that we see this previous candle made. So it might be a case where the Dow is trying to play catch up, but looking a little bit different than the other stock index futures right now.
I think Heinz is in the Dow.
No.
Sorry, it was a bad joke. You said play catch up.
Oh my gosh.
Sorry, Tom. Hey, Minnesota Gecko asks, and actually, do I have a tape measure here? If I do, I'll let you know. I'll try to fit. Minnesota Gecko asks, what's the size of your monitor? So I think you measure. I do have one, believe it or not. You just measure diagonally, right?
Right, exactly.
It's a 27. You don't get this in other shows, Minnesota Gecko. It's a 27-inch monitor. Oh my goodness. Look at gold is not liking this one bit. Not
Now,
liking it one bit.
you know, our levels that we like to look at, when I see this breakdown like this, and what I mean by that is we're trading below yesterday's low.
Mhm.
I think of your phrase that you've probably heard so many times, right? If this breaks yesterday's low, we're
Yeah.
going down, right? Like we're breaking out, we're going down. Kind of the case here, right? Beyond yesterday's lows was S1. S1 really didn't play into this as either, and that was on the largest volume of the day, right? That was on the largest volume bar of the day. So this move has legs.
Yeah, I can't explain the gap in the data. It might be hiccup that I have on my side with this bar being jumped way up here to S1. But needless to say, that's what we're trading right now, and S1 is in play right now.
Jim, I'm kind of seeing, yeah, you know what? I'm seeing something slightly different, but same concept, right? We're now at yesterday's low. We kind of can't come back to that level, which is sometimes we see, right, these previous days levels are important. This level that Jim has, those Christmas trees, that's a study you can find on the ecosystem. So I think it's called prior day, OHLC. Let me just double check. And you
Yeah.
can, if you type in your search engine, NinjaTrader Ecosystem, and then the name of the study is prior day, OHLC, all one word. You'll be able to find the site that provides it on the ecosystem and install it into your NinjaTrader 8 platform. I like to, like Jim has, we like to change the way it looks so it's easier to understand which level we're looking at. So directionally, Jim has these triangles: down for the low, up for the high, and to the right for the close, thinking of a kind of a traditional bar chart. And then you can color code them too. Jim has the different colors as well. So
here's the highs. I refer to them as Christmas trees. These are upward pointing Christmas trees. These are red downward pointing Christmas trees. But yeah, that it's and that kind of I'm going to talk about this, by the way, coming up later on today. We're gonna have a NinjaTrader platform unleashed on how to create a clean chart. And a lot of times you see a lot of lines and you got a lot of stuff going on, and you end up with a bowl of spaghetti and you don't know what's what. But by doing little visual tricks like this, with formatting your line a certain way, it could really help. Tom, PMI came out. It looks like S&P Services PMI came out pretty much on point. 51.3 was actual. Forecast was 51. Previous was 50.9. So that's again suggesting strong services sector. I think that's the only data point I have for that report so far.
Well,
Tom.
we've got the composite as well, and it's the same thing, right? I think the other part of that is the manufacturing.
Yeah.
And
right.
and if
So
services is pretty much on point, if the composite is pretty much on point, I would expect manufacturing kind of to be on point as well. So maybe it's a big nothing burger. I think what's happening now is we're hearing the first speaker from the Fed since the press conference on Wednesday.
Are we really?
Yeah, Michelle Bowman speaking.
Wow, you can't even. I mean, it's the dust isn't even settled yet.
Well, I'm kind of disappointed because usually it's Raphael Bostic who speaks first. Like his calendar, he makes everybody makes their calendar available, and he's usually the first one. Like Friday, I've got that first slot, right? I want to get out there.
He went to the Atlanta Braves game last night. He's not ready to talk. I think he's the Atlanta guy, right? I think
he is. He is the Atlanta guy, right?
Yeah. All right. So my baseball reference is right on point.
Right
so
on
S1
point.
is holding right now. Let's kind of roam about the cabin a little bit more. Bonds are giving a little bit back, about 5 handles so far. Not enough for me to get too worried about, but look at this area of weakness. Again, I'm going to use my regional highlight tool, and I'm just going to look for these little histogram bars on the left-hand side and just kind of draw a shaded area here. This is now support reinforced by R2. And this big move in bonds, we didn't retrace all the way back to where we started from. So this could be sticky today.
Yes. And it's interesting to know where that is, right? Because where that regional uh X tool, or is it X? It's the Y axis.
Well, yeah, this
Right.
is the Y one, right?
Highlight Y, because volume trails off as we get close to the top of there, right? So if we think about it, if there was buying in this area, those buyers want to keep the market up. If they're selling, they want to bring it down. But there wasn't a lot right above it, right? It kind of just shoots up when we get to that point of control. And so the question is, are we building more volume here? Does that make a weakened case, or is it just accumulation? We're going to take off again. I think that remains to be seen, but the case for buyers here seems to be growing.
Yeah, I agree. I mean, this is, if I were to draw a rectangle here, I started six bars ago, right? At 115.29. So I know we're toying with the bottom here, but I don't know. We'll see. VWAP is starting to arc over. Volume starting to slow down, so that's not surprising as prices are kind of sideways. But this is a paradigm shift. Like all these markets have had a paradigm shift to a new price level based on that report. So obviously it was an important report.
Yeah.
No matter what Michelle Bowman says. Oh boy. All right. And then lastly, let's just shoot over to Bitcoin. Micro Bitcoin CME group has caught a bid. R1 was actually, interestingly enough, R1 was at the overnight session highs. And, talk about breakout trade of the day. If you wanted to get long and a breakout on the upside here, it would have been okay. Past performance, not indicative of future results, remember. But boom, R2 held for a couple seconds, but that's it.
Yeah, I would say more than a couple seconds. I'd say about a half hour.
Yeah.
Right.
Yeah.
I mean, it took the third try to get above there, and that's where it closed. So it really was kind of the full 30 minutes. And now that R2 is support.
Absolutely. I like that. I do. I'm going to kind of, again, with the rectangles, it's Friday. We're going to draw a lot of them. So, here, what I would kind of make it like this, right? And draw it all the way across and say, all right, this was kind of where resistance happened. Resistance happened for a little while. We broke through here as well. So this area of resistance is now support, as Tom pointed out. And I agree with that. Boy, what a morning, Tom. What a morning. The whole, let's bring in the Fed funds tool, see what that looks like. We'll see if that's changed its tune, so to speak. Let me open this up. Let me hit my refresh button on my browser and see if this thing can give us some. Aha. Things are starting to shift to the other side. Let's go to the probability tab.
Oh, wow.
Yeah.
Look at
that. Yeah. Rate cut number 1, September. Rate cut number 2, back on the table for December. If you believe the teal, if you're a teal fan, this is what we're tracking now.
So question for you.
Yeah.
We had the press conference Wednesday. It's now Friday. It's still fresh in our minds, right?
Yeah.
What happens when we get other data points that might not have been as, I would say, complacent as today's data point was, and that press conference kind of falls out of our memory, right? 2 weeks from now, maybe a week from now, sometime we'll get CPI.
Yeah.
Right. And then we'll get PCE again. And then we'll get it. I think we'll get it. Let's see, maybe one more time, but before June. I don't know about that. But point is, can this swing back, or is this something that this close to September, we might see that, like, this is the new pattern on the matrix?
Yeah, I mean, this is going to be, and we have 39 days between now and the next meeting. So there for certain is going to be some data for the data dependent people, some data coming out. And it's kind of
Right.
interesting. Over these years, we've kind of shifted from forecasting, forecasting the business cycle, forecasting the economic potential, to data mining, data science, data dependent. And I don't know if that's because of the internet or processing power or whatever, we were able to kind of move these things on a dime in real time. But it's not, the old school, some people would argue the old school method was better, was forecast, set monetary policy that way. The data is going to be noisy anyway, so let's ignore it, or at least, not spend as much time trying to pick it apart. So I don't know. So to your point, what I'm trying to say is, yeah, this is these teal squares are gonna move all over the place between now and July.
Right.
And I think there's even a way to check that out. One of these tabs does that. I'm not sure. So play around with the Fed funds tool, folks. It's awesome.
It's a great tool.
Boy. All right, let's go back to E-mini S&P. We'll go to the micro E-mini S&P, see what we're up against. We still have about a couple more minutes left in the opening range, 5 minutes and 5 seconds to be exact. Let me get rid of all this old debris from yesterday.
It's making a new high, and it's heading towards R2.
Yeah. Yeah. And for some reason, I have a red dotted line up here. Yeah. 51. So does that happen to you? You get like the price moves a big distance and you see a line there and you're like, how did that line get on there?
Right. And you wonder, when did you put it on? Right. And you could probably exactly. You could probably go to a daily chart and figure like maybe what day it was, but why did you do it? Exactly. I see, when I start to see R2, I want to see where R3 is. Right. And if we think about it, R2 to R3 is yesterday's range. It's what it is. It's how it's, the distance between R2 and R3. It's, mathematically.
That's the definition. That's the equation, right?
Right. That's the equation. Yeah. It's yesterday's range. So we've already moved a portion of yesterday's range, not the full range, probably about 75%. So to get to R3, we have to do more than what we've already done with less news, right? We've got a 10 o'clock number that probably won't do what the NFPs did at 10. So I want to know where R3 is, but I'm not realistic about R3, right?
Yeah. I mean, that would be, so we're up 60, 70 right now. That's another 80 handles up. We'd be at, I don't think we've ever seen the mini S&P up 150 or 140 handles. That would be, right. I know I'm the one that always says it could go higher. It could go higher. It could go lower, but that's a stretch.
Right.
That's a stretch by any standards here. Where are we at on time? We got a few more minutes left here for this opening range to complete.
I was going to say, let's take a look at natural gas. Pretty much every market was affected by that report, except I think energies. And I could be wrong, but yeah.
Yeah, it's going to take a second to load. While it's loading, maybe we want to remind people about the chart contest.
Yeah, for sure. So today's the final day to get in your entry. We've had some great entries already. Thanks to all who have entered their charts in the chart contest. So we want to see what charts you use, or a chart that you use for trading, with all the indications, the studies, the tools that you use, and just give us a little bit of a description of how you interpret your chart, and send that to learn@ninjatrader.com. Get us, screen grab, very easy on a Windows platform to do that. Windows Shift S, right? Those three keys, the Windows key, the Shift key, the S key, and that will allow you to just click on the chart. It'll take an image and you can drop it in an email and send that to us by end of the actual day tonight, I think Pacific time. So midnight tonight, you can send it to us to learn@ninjatrader.com. We'll take a look, and the one that we pick to win this contest, you can come on and talk about it with us.
Absolutely.
Yep.
Let me reload some historical data here. There we go. I'm looking forward to it. I've already seen a lot of these entries, Tom, have been great.
Yeah.
This is going to be tough. It's not going to be easy because a lot of them have been great. And Many of it. Use the snippet tool, get it in, learn at ninjatrader.com. It's easy peasy. Here's Nat Gas, Tom, selling off right now.
Yeah, kind of hitting an area of resistance earlier in the morning. That 204 level, I think, was kind of we're just dipping below that. Yeah. But I see that wave pattern, right? The advance, retrace, but not quite as far. Advance, retrace, but not quite as far. So higher pivot highs, higher pivot lows. Right now it's looking bearish, but I don't know. This could be a range bound day. The reason why I like to look at these markets is, on news events, 8:30, that really affect nat gas? Probably not, right?
I mean, I don't know. I think everything's related. I mean, I think everything is related, but you're right. I mean, nat gas has, there was a lot of reasons why nat gas has finally got to a two handle, right? We've been in a one handle for a long period of time, including weather, more in storage, huge production in 2023. So those factors probably are way more important at this point.
Yep.
So, all right, let's take a really quick break. We'll get right back into some trade setup ideas.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com.
And another thing, we're back, everybody. The breaks here at NinjaTrader Live are spectacular. I wish you could listen to them. E-mini S&P has 509,000 contracts traded, which is more than the micro NASDAQ at 480,000. That has not been the status quo lately. It's been the opposite. So this is telling me that there is certainly more institutional participation coming in today.
Yeah, I kind of see for the e-minis, I see this. We're right at the point of control, right? So this is where the most volume has been done. Right here, 5150 or 5151, somewhere around there, right? 5149.25 is the actual number. So I'm looking at R1 and I'm thinking that's a breakout trade to the downside because there's so little volume down there, and that could work against us, right? There's no interest there. There was no interest there. The question is this market overvalued right now? Is it a knee jerk? Is it, or is this a legitimate thing?
Well, let me suggest something fancy.
Okay.
And, we learned this yesterday from Mike Burke, where he had that, a reversal trade, right? We were stopped out, but we doubled up our stop for a reversal.
Right.
To the upside. And that, we sweated it out for a while, but it eventually was a good trade idea. We had 2 out of 3 units we picked up on the upside, and it worked out okay. Past performance, not indicative of future results, real-time sim account. But I see the same kind of scenario brewing here, where, hey, let's try to get long at the bottom of the value area.
Yep.
And then if we get stopped out, let's do the
turn
breakout.
it around. Perfect.
Right.
So
So let's go
right
along.
there.
Where do you
Yeah.
want to go along? At the point of
Yeah,
control?
at the point of control. That's or no, the value area. Value area.
I'm sorry. Yeah, the bottom of the value area at 40,
Yep.
right?
And you're doing
And so
MES, so I would do
yeah,
maybe 3 units.
I'm gonna do 2 because I'm not as brave as you.
Okay, and then let's do a stop that turns it around at R1, just south
All
of
right.
R1.
South, a little bit south of R1. All right.
Yeah,
So let's go sell stop.
do
And then
4.
we're going to take it to 4.
Right.
All right. So the idea is here, we want to buy 2 lots at 51, 40 and a quarter. Again, you could tweak it either way, a little bit up or down or tick, because we're waiting for a wick back down into my area of support, right? We've seen it once, a little bit twice, and now 3 times. And then we want to get long. If you want to be more aggressive, you could move this up a little bit. I don't blame you. I want to make it right to the value area low.
Yep.
And what we're saying is, if this area holds, which we think it will, then we're going to put some profit targets up high. If not, we're going to reverse quickly. We're going to reverse quickly if this market starts breaking down below VWAP. So we're right at that. We just got filled. We're long 2 right now. The stop is more than just a protective stop. It's a protective stop plus.
Yeah. So great explanation. I think one thing that came out while we were talking was ISM Services PMI.
Oh, forgot about that.
So it came in, it was a big miss. So it's forecast to be 52, which is expansionary.
Yeah.
It came out at 49.4, which is not only a miss, but it's also down from the previous report of 51.4. It came out at 49.4, kind of on the wrong side. Now, you might think like, okay, well, that's bad news, right? So bad news is good news. So right now, being long, this might be the place to be. Problem is, I think, when you have these multiple news events, especially one that moved the market so big, how much more bad news can this market elevate the market, the price of the E-mini S&P, or does it fall back to bad news is bad news at some point? Like it's so much bad news. Does it translate into so much good price? I don't know. But I like the idea of turning around a stop and reverse stop because of the lack of volume. There's a vacuum in that big move up. I think if we start trading in there, in that area, I think it'll just try to get back to where we were before the 8:30 release.
Yeah, no, I gotcha. Right now it's holding, right? Right now trade's going our way. I put a target in time at that first upper standard deviation band. I want to see what you think about this, only because we've traded on that first standard deviation band every single candle since the 910 to 920 candle.
Yeah, I think it's great.
And then again, if we achieve that, then we're going to change the stop back down to 2 lots and move it up to 41 and a quarter maybe.
And then we'll think of a second target or just leave it run.
Yeah, we'll for sure got to think of a second target. But I just threw that in there while you were talking. I mean, we have the target. This particular candle is the target wick, right?
Oh, I think you got a nice dotted red line up there. We don't know why it's there, but why not use it?
So if we put our second unit here to get out and it hits it, I'm going to be like, yeah, I reforecasted this price a long time ago. I knew it was going to happen today.
Exactly. My father-in-law has a great saying, we forget, but we never forgive. That's kind of what that is, right? I don't remember why I put it up there, but it's there for a reason.
Yeah. Remember, folks, when we do these trade ideas, it's with real-time data. We're in a real-time sim account. Anybody can get one if you don't have one, right? You don't have to fund an account. It's a real-time simulated account. You could use it for a certain period of time and kind of get familiar with, how the software works, how the markets work, technical analysis techniques, and all that stuff. And, again, we do these trades as kind of like to get to a lesson learned at the end. Right? Mm-hmm. Was it a good idea? Was it a bad idea? Why? Why was it good? Why was it bad? Could we have better entries? So really what I'm saying is don't just follow along blindly with us in a live account as we go forward with these.
So Jim, there's more information from that 10 o'clock report.
Yeah.
Kind of flushes out that initial information. So prices paid were up from 53.4 previous report to 59.2. So it was forecast to be 55. So that's kind of a big increase for prices paid. I don't think that's a very good thing for the economy, right? New orders are down. Employment is down, and not only down, but a miss. So employment was forecast to be 49. It's a 45.9. That's almost a 10% miss, which is not good. So I think the numbers overall for ISM were lackluster at best.
Yeah. And so the question is, what's more dominant? Non-farm payrolls. Look at that, man. We just survived that stop by so far. Not so. Here's the risk, Tom. The risk again is we're going to end up short at the bottom of this at our,
Right.
At R1 and R1, so far we've survived it, right? So far we've survived it, and that's I don't know if we will or won't, or if we're correct or not correct on our trade idea. But you're right. This is a market reacting to the data that you just mentioned.
It's kind of an interesting thing too. If you look at where the top of that candle is from 830, you could draw a trend line pretty much with the next candle. So the red candle to the right of it. If you draw a trend line, no. So
did I start it at the wrong spot?
Yeah, let's start it at the next candle.
Okay, so we'll start it here, and then where do you want to go?
Up. You're connecting highs, right?
Something like that.
Yep. And now you could look at the trend line when you connect the lows from the same candle.
All right, gotcha. I see where you're going with this, Tom.
Yep.
Megaphone.
Crazy pattern.
Yeah.
Indecision.
That's not good for our trade idea.
Right. I mean, what it says, and this is what happens sometimes on these report bars, right? 830, you could put in your orders surrounding that market, and you could get hit on one, and then it turns around and hits the other in the wrong way, right? If you're thinking a breakout trade, today was a day where you actually probably would have done pretty well. If you did a breakout trade surrounded the market, it only went one way. So you would have been long and you would have caught the breakout. Now, maybe not the level you want, right? Because there was nothing done for, 20 handles, but this is not the same. This is, for the last hour and a half, we see this widening pattern. So, we're long, but if we're at the lower end of the megaphone, we're going to get short because of our turnaround. But then if it turns around and tries to make a new high, we'll be stopped out again. So it's an interesting pattern.
Yeah, no, for sure. The breadth of the candles are this last previous candle is huge.
Yeah.
High to low. What is that? 36.68. That's a 32-point move. So that was pretty big.
Yeah.
Oh boy.
And think of that. I mean, 32 points, Jim. That's almost half an ATR, average trading range.
Yeah.
Doesn't look like that.
Yep. There we go. All right. So now we're going to test whether or not we just reversed everybody. We just reversed, which meant the first trade was negative P&L, but the second trade is unrealized. So right now we'll see if this VWAP holds right now. I am encouraged that the VWAP's kind of flattening out a little bit.
Right.
And Tom, what do you think? We got some work to do. We got some trade management to do. Let's cancel that. I put a target here. This was Wednesday's high. The only reason I put it there, we could change it.
I kind of like keeping it there, like kind of halfway through the big move,
Yeah. And then target 2, I didn't even get that far yet. So, I mean, boy, would we give all of this back all the way today? I'd be surprised if we did, but we could.
But if it did, I would start there, right? I
Okay.
would start there, and just like we would trail a stop as the market continues down, we might, rethink where our second target is. But I want to get that first one first.
Yeah. And by the way, this trade idea, this was triggered by Mike's idea yesterday. So we totally have cover on this time.
Yeah. And how did that
Just
work out
kidding. Just kidding,
yesterday?
Mike.
But
it worked out good.
It worked out well, right? Yeah.
Yeah. So if this works out good as well, then he's MVP this week for sure.
We'll see.
By the way, mission control, I do have a couple of, and do I have time to show a page? I have a couple of links here for that total non-farm payroll number. I just wanted to show Fred. This is Fred, and I don't think they have April up here yet. But what I thought was interesting, Tom, with tracking this is the change, right? This is the change in thousands of persons month to month. And this link, I guess, we're going to put into the chat, guys, as well as the real report number. But if you guys haven't already, but it's kind of like a chart. It is a chart. It's not kind of like a chart. It's exactly a chart. But we have these swing highs are keep going lower, keep going lower, keep going lower. Oops, here's a little higher one. But now we've kind of, since April, we've kind of settled into the sideways action here on non-farm payrolls. And so my question to anybody who will be able to answer this, probably should ask Blue, is this suggesting kind of a normalization of the business cycle after we're finally out of COVID?
Yeah, I would probably want to go back a little bit more. If we were to go back 10 years or 20 years.
Oh boy, it gets funky, Tom. We'll do it.
Yeah. Well, okay. Right. So you have to skip COVID. So if there was a way to kind of skip COVID and get a bigger data set, my point is this: those variations that we saw after COVID in 2021 or whatever you want, wherever you started before, is that normal? Right?
Yeah.
Is that variance normal? Because if it isn't, then how do we compare to previous pre-COVID levels? I don't know.
Yeah, that's a good point. What I could do though, watch this.
Yeah, exactly. You could do that.
I could adjust it a little bit. And let's go back. I don't want to go back too far. I don't want to go back to like 2008, but so just looking at this, the high water mark is 387. The low water mark is 5. we had 5.
5,000, 5,000, right?
Yeah. No, I know. I'm teasing. Right. So pretty, at least the high is kind of defined, right? The high is kind of defined.
Right.
Oh boy. Anyway, fun with Fred. That's what I call it whenever I look at a Fred
Federal chart. Reserve Economic Database.
Oh yeah. I like that.
Yep.
I like that.
I'll send it into them, see if they'll use it.
Yeah. Oh my goodness. All right. Well, let's kind of roam around like Kevin. So we got to put a stop in here, Tom, as well. So just a couple points on this reversal. We did not see a huge acceleration on the downside. We saw the opposite. We saw support achieved, and actually the megaphone pattern here is holding. Not done yet. We probably want to consider where we're wrong on this trade idea with 2 micros. And right away, what comes to mind, Tom, and I'm going to draw a rectangle up here at the top of the value area. At this point, in my mind, I don't want to take any more heat.
So can we see that value area?
Yeah, we can. Which means I would adjust my targets on the downside. But look at how perfect that is.
Yeah.
Look at how perfect that is.
That is a nice
to your point. But to your
right?
point, though, we get into this dead zone. What's called a dead zone, right? From 51.33 down, you could get some price acceleration really moving down quickly.
Yeah. I think we go to the top of the value area. Part of me thinks, well, it's a micro, so even though that looks really wide, it's really, it's like 20 handles on the micro is 2 handles on a regular E-mini, thinking about the risk.
Yeah. And I would say, I think that's okay. But, again, I'm thinking we're going to be quick to trail this, right? We're going to be quick to trail this because.
Exactly. Right.
Yeah. All right. We're on the same wavelength.
Yeah. I'm hoping this doesn't continue to behave like a megaphone. I'm hoping that it trails that lower edge of the megaphone and in fact breaks through even further. When you have a downward sloping trend line, you don't really care if it breaks down, right? Because you're already trending down. It's just about acceleration. But in this case, when we know there's no volume in that area, when it breaks down this lower trend line, then I'm interested, right? This descending supportive trend line becomes interesting when there's nothing to support it. There's no volume to support it till we get to 51.12.
Yeah, I agree. So one thing to consider too, institutional folks are probably done till this afternoon.
Yeah.
Or at least going to be less active. We could see that in the volume smile already starting to materialize. And so when pretty much the main news is assimilated, other than what other Fed folks are going to crawl out of the woodwork and start. I shouldn't say it that way, but you know what I mean. Are gonna show up on a stage somewhere, and
they're ready.
Get their.
They're at the gate. They're waiting for that gate to open. For the
Yeah.
last 2 weeks, they've wanted to
Yeah.
speak.
Yeah.
And Bowman was the first out of the gate. Okay, great.
I know. Which is interesting to me because when you do that, you put yourself out there.
Yeah.
But then again, maybe there's so many of them saying so many things nobody remembers.
Well, also, I think
who was right and who was wrong.
I think the press conference was a love fest, so it's easy to speak now, right? The message is there. Everybody ate up that message, so here we come. Here we come. We're breaking down that line. What's interesting, Jim, the volume. Look at your volume on this down below.
Down here?
Go to the volume.
Oh, way down. Yeah. It's going
on the micro E-mini, the most volume happened at that ISM print.
Yeah.
And it was a pretty big turnaround candle. So I like our direction. I liked the direction before, but I like the way we tried it. It was a breakout trade for me.
Yeah, that's a great observation. So look at that volume bar. That volume bar, you're right. These are the bears jumping on the bandwagon.
Yeah.
Big time. Continuation, confirmation candle. We have that last candle. We're at a brand new 10-minute candle now. And things are moving. Moving. Oh boy, we'll see. So the megaphone pattern's still holding though, right? We have a lower low. We have a lower high, lower low. Maybe we're going to be patient here. We didn't see that velocity I thought we were going to see. We saw a little bit of velocity, right? And then this could be a lesson learned. Like we were too greedy.
Could be.
Yeah.
I also see, Jim, and this is just kind of crazy, but a very side diagonal head and shoulders pattern.
Oh my gosh.
So if you were to measure,
is that even possible?
If you were to measure the top of that big wick where you circled.
All right, I'm going to put some ellipses here. So right here. All right, so there's one here, one here.
I would go lower, but okay.
I would. Is this your shoulder?
Go to the right. Go down and to the right. Well, two more. There we go. No, one more. A little left. Left.
Left. Right.
Yeah, there we go. So I go to the top of that candle.
All right.
Right, that's one shoulder. You
got shoulder
the head.
one.
You've already hit the head.
Yeah.
The right shoulder isn't as easy to identify because it really hasn't come back too much, but you could put it at the top of this candle. Just okay.
So
it's kind of weak.
I wouldn't identify any of this.
So what I might
So
do, I don't really care about that, right? I don't really care the fact that it's sloping. I don't really care about the fact that it's not an equal and opposite return on the top, on the right shoulder. The left shoulder is perfect. What I'm more concerned about is the head to the supportive trend line, right? So if you'd make that measured move from the top there to the trend line at the bottom of, extend that line down to the trend line,
okay,
and we'll just
right
do
there.
the breakout, right? We'll measure that move, and then you can move
And the
it to the.
breakout actually happened right here, right?
No, it hasn't happened yet. So I would say
Oh,
if it
okay.
breaks
So
out on this candle, then we have a target. If it breaks out on the next candle, we have another target that's a little lower.
I'm just going to move this over one candle.
But I think, yes, what I think we're saying is a breakdown might imply lows of the day. We might test the lows of the day.
Wow. Okay. Again, lessons learned. We'll see. That's a great observation. Um, yeah, I'm still struggling with where the neckline is. I guess that neckline would be the diagonal line down, right?
Exactly. Now
Yeah.
people might say, "Oh, well, it's already trending down. It isn't really a true head and shoulders." Like, yeah, it's not flat. Sometimes it moves up, sometimes it moves down. We're adaptive.
Adaptive. Yeah, a little crooked, leaning on the side, maybe watching
Exactly.
television like that. Something like that. I don't know. Oh man, the Mets and the Cubs love to score runs, don't they?
Yeah, that was an ugly game yesterday.
Yeah.
Ugly ending.
Yeah. Yeah. So though, that's good though. You know what? Sometimes a pitcher's duel isn't as exciting as a extra inning 8-7 game.
You know what? I'll say that. I'll give you that. Um, for me, it depends on the pitcher or the pitchers involved, right? So if it's a
Yeah.
pitcher that you expect, going to be good, right? Clayton Kershaw, back in the day, Jacob DeGrom, just watching him pitch was amazing. The way his pitches moved, I got to see it up close, front row, in Citi Field, and those were good times. But when you get it from a pitcher you don't expect, okay,
Yeah.
that's it's interesting. But with the Cubs, they have this pitcher that's now 5-0, six outings, lowest ERA. I think he's like the lowest ERA for a pitcher ever to go 6-0 or 6 starts 5-0. And it's not really getting the play out here just because he's not in the East Coast. East Coast media focuses on the Yankees and the Mets. So to be able to see him twice in the last week was great because he's known for that, right? He's known to be a good
Yeah.
pitcher. So it can be exciting. But you're right. When everybody's scoring, as long as it's even sided, right? Saturday's game where the Cubs couldn't score even against position player pitching and the other team scored 17 runs, that wasn't as fun when it's your team
Yeah.
losing.
Yeah. It's not. It's like, slaughter roll. I'm moving the
That's
stop
right.
down to that target wick one back.
I
So
like it.
I'm just moving that stop down to here. Just do a little bit of risk management here. This looks like the trend's going to continue down a little bit. Maybe even we're going to get our target. We haven't got it yet. We're about 2 points away from getting our target on the low of that wick. But again, I'm worried about a turnaround here, back to that point of control and then some. So I think it's prudent. And now we have a little bit better risk reward on the trade itself. Once we get the first target, if we get the first target, Tom, then I would just change my stop to one lot and then move that stop to break even, which is around 30s. I'd move it down to 35.5, something like that.
Yeah, I like that. You don't want to give it back, especially after you've taken one off the table.
Yeah. Right. Oh boy. I don't even know what the next segment is. That's how much information is flowing through my head right now.
Let me check.
I know I'm doing a NinjaTrader Live on how to create a clean chart. I practiced last night. It's going to be awesome.
So
If I do say so myself.
So you were right. Your next segment is Platforms Unleashed.
Okay.
We'll be looking at building clean charts. That's the title of that show.
And then after that, Oh, we got Speculator Seth back.
Yeah, I can't wait. We're going to be talking about what happened this morning with non-farm payrolls. I enjoyed talking to Seth on Wednesday. He's got, a unique view at the markets, a unique take, and I think it was just fun to talk to him. I hope everybody kind of felt the same way. He has a lot to impart, and we'll see what he saw, what he thinks about what happened today.
Yeah, that's going to be. I'm looking forward to it. It's the first time I heard him present was earlier in the week, and I was impressed. So I'm sure he's going to be equally as impressive today on a Friday.
Of course.
So interestingly enough, Tom, just from a lessons learned point of view, we may get stopped out on this trade, but I'm looking at VWAP, volume weighted average price, and it's kind of holding, right? Yeah, we had some prices below it. We have a body a little bit below it, but so far it's kind of holding. We'll see where this candle closes. And this candle might close red. I don't know. Yeah. But this volume weighted average price is really top of mind right now for me. Let me get rid of this little guy.
Lower highs, lower lows. Don't worry.
All right. I'm not worried, man. Oh, all right. I am not worried. All right, Tom. So we know what the agenda is for the rest of the day. And then after Speculator Seth, I believe, I'm not sure who's doing midday wrap up. It's Mike Burke for sure, and maybe one of us.
Well, Ryan Krebs is going to join us.
Oh, that's right. Ryan's going to be here. I forgot. Ecosystem guy, Ryan. He's going to be with us here. Ryan Krebs is awesome. So I can't wait for that. So let's go ahead and take a really quick break time. We'll get right back to it.
Awesome.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers, building trading indicators, and more. Visit NinjaTrader.com to get started today.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers, building trading indicators, and more. Visit NinjaTrader.com to get started today.
All right, I am back, folks. NinjaTrader platform unleashed for the next 30 minutes or so. We're going to be talking about how to create a clean chart. And I don't know about you guys, but with me, it's, every time I add something, I don't delete something and it gets cluttered, it gets confusing. I look at what is this line for? What is this moving average for? So every once in a while, I'll start fresh. And I'll just make a brand new chart layout with the things that are important to me. And so that's what we're going to do today. And, NinjaTrader software is very powerful in that regard. You really could customize your charts the way you want. So let's go ahead. I'm going to go ahead and just create a brand new chart, right? And I'm going to go to the control panel, the control center here, right? It has a lot of stuff on it, right? It has my morning trade activity on there, and moving around in real time. I have the columns set up how I want to set them up. And on the upper left, though, there's a new button, right? It's a new button, and it gives me all of the things I could launch, right? All trading ladders and charts and market analyzers, superdomes, all that stuff. I'm going to click on the word chart, just new, drop down menu, chart, and it's going to give me this pop-up window, right? And the first time you see it, it's like, what is this? How do I handle this? So at the top, it says instruments, and this is synonymous with markets, right? What market would you like to analyze? What market would you like on your chart? And, if you're brand new, you might have some suggestions here in the drop-down menu, right? You might have some some things that are already suggested. Or, you could just simply type a ticker symbol into that bar. It's a smart search bar, or even a keyword, and it's going to give you a list of ideas, right? It's going to give you a list of ideas. So it's pretty easy to find the market you're looking for. But let's go ahead and just pick E-mini S&P. E-mini S&P futures. We'll click on that. Come on, let's go, computer. And there we go. We have applied it, right? We're going to apply it to this chart, E-mini S&P on the left. It's set as a weekly, right? You can see it's a weekly chart. Now we could change that time frame to whatever we want. And by going over to the right-hand side and looking at properties, right? On the property side, I'm going to change the type from a week to any of these, actually, but I'm going to go with a daily chart. We'll look at a daily candle chart. That might be fun. So I'll click on that. And then I'm going to look down, what else might I want to customize off the bat, right? Is there anything here that I'd like to customize off the bat? I'm going to look back 365 days. That's plenty. So I'm not going to change that. I'm not going to change the end date. I'm not going to change trading hours, because this is going to default to the 23-hour period of time. If you're doing an intraday, if you're not doing an intraday, it doesn't matter. So chart style, right? This is the other thing that we want to think about, right? And candlestick is defaulted here, and the Japanese candle chart is what I'm going to select. You can select any of these options that you'd like. Line on close, open, high, low close is pretty popular as well. But let's stick with candle. I'm not going to change it from here. Now, the next level here is colors for your bars, right? This is kind of important to people. Do you want it to be red or lime green? I'm going to change it a little bit. I'm just going to tweak it a little bit. Let's see, from red I want it to be a little darker, right? And you could scroll up here. You scroll up or down to whatever color you like. And I'm going to go with maroon. I'm going to go with maroon. I like maroon. It's a little darker. It's going to be easier for me to see contrast against the white background. And then for the bars up, again, I want it to be a little bit of a darker green. So I'm going to pick dark green. And then again, personal preference, whatever you want. Auto scale, that's all good. All of the rest of this stuff is okay. And I'm not going to plot my trades on the chart yet. I can show you how to do that later, but that's it. That's the only thing I'm going to customize. I'm going to hit OK. And it's going to open up on one of my screens here. Let me move it over. A new chart. And let me open this up all the way. All right. So you can see the candles are there. And you might say, well, Jim, the colors aren't so good. Could you change that maroon to a different color? Of course you can. You're just going to double click onto the actual candle itself, and it'll give you that same dialog box, and you could go ahead and just click again. And all right, we're going to make it, we'll make it fire brick red. Let's see if that's any better. Fire brick red. Apply and okay. And I like that. So we're going to keep it at fire brick red. Now, it's opened up the chart trader too on the right-hand side. So this panel here is important if you are going to trade from the chart. right? That's what this is, why this is important. And one of the things that you want to do, if you are going to do that, you don't have to do that. You could trade from the trading ladder or from the ticket itself. But if you are, you're going to want to change, you're going to want to populate it with an account number. I have a few different accounts here. So I'm just going to populate it so it's there and ready to go. So, and I'll leave that there for now. If you want to hide it, you could hide it. So right now it's active, right? Go up to the egg beater up here. It's not an egg beater. It looks, it's this icon up here. It says chart trader. You could turn it off, which means you can't place a trade from the chart. You can't make that mistake if you're scared of making a mistake. Or you could, this is the default right here. A chart trader is on, or you could have it activated, but you could hide it, right? I can click on that and I could hide that little panel if I wanted to, and I could still place trades from the chart. I'm going to go back and just show it again. Let's just show it again. And we'll keep it up there for today's presentation. All right. A couple other things to think about is bar width and the separation between the bars, right? If you click at the upper top here, at the candle, at the upper top icon, you'll see that you can change the spacing between the bars. You could either do it by clicking here, right, increasing the bar space, or you could use the control down function on your keyboard. Opposite is true with you want to reduce the spacing between bars, and you could just click on control up or just click right here. And then the bar width itself, you could change. You could make it bigger or you could make it thinner. Again, we're going to do a couple things here. We're going to add to the space, and then I'm going to make it a little thinner. I'm just going to make it a little bit thinner. And so now for me, this proportion is good for me. I can see it pretty well. I'm happy with it. There's enough definition between the candles, right? There's enough definition between the candles, and I'm happy with that. So however you want to format this is the one thing. Charts are customizable and they're very personal, right? Everybody sees something a little different in a chart, and that's okay. So just a quick reminder, again, the right axis, you could just use your mouse to make it, excuse me, expand it or contract it, and the same at the bottom. Expand or contract. Hang on a sec. All right. Mouse in the middle, if you hold your control key down, will help you just kind of, move the chart in any direction you want, right? So let's go ahead and do that so it's nice and centered. So right now I have a pretty basic candle chart. That's all that's there. Now, the first thing I'm going to add, I want an oscillator, right? I want to put an oscillator on here, and there's all sorts of oscillators to choose from. And I'm going to go ahead and right click, and I'm going to go to indicators. The indicators on the left-hand side, and it's going to open up another dialog box, which gives me all of the indicators that are available to me. Now, if you add an indicator from the ecosystem, as a matter of fact, if you download it and add it as a plugin, it will also show up here, right? It'll also show up in the indicator list. And Mike Burke and Ryan Krebs are going to cover that, cover a couple of new ecosystem vendors here in a short amount of time. So hang tight. So again, there's all sorts, I don't know how many of these options there are, right? There's a lot of options, right? And some of them you might be interested in, and some of them you might not you might not be interested in. I'm going to pick RSI, Relative Strength Index. You could put a stochastic there. You could put a MACD, Commodity Channel Index, whatever's your oscillator of choice. And you could put more than one if you want, but then you're starting to clutter your chart up, right? I'm going to go ahead and just double click on that RSI in the available section. It'll populate it down here to the configured session, right? And it's highlighted already, which means on the property side, then I could adjust it, right? Let's say you don't want the period at 13, you want it at 14, you want it at 20 or something different. You could change these settings here. The smooth average line, you could change it from a 3 if you want. I'm going to go down here and I'm going to change my calculate though to on price change. That way I don't have to wait for a new bar to see a price change. Maybe a little less important for a daily chart, but still I like to do it this way. So I'm going to click it on it, click there as well. All the rest of the stuff I'm going to keep. Now, here's another important area: visual panel, new panel. What it's going to do, it's going to put the oscillator at the bottom of the chart in its own separate window, own separate panel. So panel 1 will be the actual candle pattern. And panel 2 will be the RSI. And then let's keep moving here. So new panel, it's going to create the second one, right? Justify the data on the panel. And then we have the lower lines where, it's kind of tagged to that 30 level oversold level. You could change that lower line if you want to something else. Maybe you consider 25 to be a more important level for oversold. Change the color, the type, and all of that stuff. You could do with that. And then the upper, you could do the same thing. At the bottom here on the plots for the RSI, you could change the color, the line thickness. I'm going to make it a 2. I'm going to make it a 2. And some people hide the average, but I like to keep it there just to kind of see crosses. And I'm going to keep that more subtle, right? We'll keep that color scheme the same. And I'm going to hit apply, and I'm going to hit OK. And now we have it. So now we have a separation, right? We have a separation between the upper panel, and we have that red line separating it, panel 1 and panel 2. And so now I have my oscillator, and now I can compare my oscillator to my to the candle, right? So it's right underneath it. The crosshairs itself transcends both panels. So as you move your crosshair around and you want to say, hey, what happened to price when we touched that 70 level, that important 70 level on the RSI, and you can kind of look, it says, well, we hit a high, right? And then you could kind of make some, analysis assumptions and analysis forecasts based on that. So that's a pretty important feature as well. And again, I only have one oscillator. And when I'm thinking about keeping a chart clean, I'm thinking about, I want my best oscillator up there. I don't want to have 2, 3, or 4 oscillators, even though I could, right? They'll just create a panel 3, a panel 4, a panel 5. But it's just overload. And you are going to get some conflicting data. So what I would suggest is get real good at one that you want to use for whatever time frame you're looking at, and then hopefully you'll be able to see some magic in those tea leaves. So that's my suggestion for that. And you could see the blue line here. It's double. I made it twice as big so we could see it a little bit better. And you could expand or contract the axis on panel 2 just by grabbing it with the mouse and moving it up and down. It makes it really, really easy. All right, so we have that down. What else do we want to add on this daily chart to make it clean and give us some ability to do some analysis? Well, moving averages and moving average crosses seem to be pretty important to people. So we're going to go ahead and add a moving average and a moving average. 2 moving averages, which will show us potential moving average crosses. So I should say it that way. That's a little bit more accurate. And again, I'm going to right click and I'm going to go to indicators, right? I'm going to go to indicators and I'm going to click on that. It'll open up the same indicator box. And I'm going to add some moving averages. But now the first one I'm going to add is going to be an exponential moving average, right? And so sometimes in the indicator list, you'll see, just kind of the abbreviation or, the main letters, right? EMA, exponential moving average. That's, and you'll hear people quote EMAs all the time. The EMA is at this level, is at that level. So I'm going to double click and I'm going to bring it down. Now the default is at 14, it's period D14, 14, but I'm going to change it to 8. For me, 8 is my number. Again, you could experiment. The good thing about the NinjaTrader software, it lets you experiment with different levels. So you could kind of, see which particular moving averages you really want to track. You don't have to follow me or Tom or Mike or anybody for that matter. You could kind of create your own, again, view. So I'm going to put it at 8. Now, this is going to be my fastest moving average, right? Meaning it's going to be the smallest period so that every new period of data is going to cause it to move faster than if I had a longer period, right? It's going to change quicker. And I'm gonna color code that. I'm gonna go to the bottom here and I'm gonna color code it. In my mind, red is fast, right? So I'm gonna change it to red, and just regular red is fine. And again, we're gonna experiment with a 2 width, right? 2. We'll keep it at the width at 2, and we won't go dash or anything like that. We'll just keep it a solid line. We'll keep it a solid line for now. Now calculate. Again, I'm going up to calculate on. You could do each tick. That's a lot of, that's data sensitive though. And you could, make sure you have some good processing power there on your PC. I'm going to hit on price change. Okay. It's a little bit less data intrusive. And then that's now panel here. This is important. Panel, same as input series, right? Now let's click on that and see what that shows us. Well, same as input series is panel 1. Or we could add it to panel 2, which would put it on the RSI, which it probably isn't best practices. That would confuse me. Or we could create a new panel, right? We could put it in a new panel, panel 3, right? Which would be below the RSI. Now, if you do decide to create a panel 3, you could always change the order of your panels. It's not hard to do. But for this case, for demonstration, let's say same as input series, right? Same as input series. Now, here's another thing that's important. Price marker, right? It's checked. Now, some folks don't want it to be checked because it just adds color to your right axis. And if you have a lot of these up here, it could kind of be a visual impairment. I'm going to take it off later, but let's leave it on for now so you can see what I'm talking about. Scale justification is going to be right. So I'll hit apply and okay. So there's my 8 exponential moving average. Now, notice at the top left, it tells me, hey, Jim, you have on a daily chart, you have an 8 EMA on there. Thank you for that. You could take that off if you want, if it bothers you. You could take that off. And again, I'll show you how to do that in a little while. So that's kind of moving average number 1. And you can see the exponential 8, it fits really nicely on the chart, and it should. It's a tighter time frame. Let's add the second part though. Let's add another moving average. Again, I'm going to right click and I'm going to go to indicators again, and I'm going to add a second instance of this moving average. But I'm not going to do an exponential this time. Oh no. We're going to do a simple moving average, and I'm going to go all the way down to SMA, simple moving average. I'll double click on that guy. It'll bring it back down to the configured section, which is highlighted. And I'm going to look at the period again. Like, you know what? 14 is not going to do it for me. I'm going to change it to 20. Well, actually, I'm going to change it to 21 in honor of Mike Burke. Mike Burke likes the 21s. I like the 20s, but we'll do 21, right? Period 21. It's on the daily mini S&P. That's all good. Calculate on bar close. Nope. We're going to do on price change. Now, this label, this is where if you delete this SMA, this word SMA, where it says label, then it won't show in the upper level of your chart. It won't show, it won't be up here. It won't be listed up here on the upper left. I'm going to keep it there now just to kind of show it. Scale justification right. Let's see, panel, again, same choice. Do we want to keep it on the same panel, or do we want to put it on the second panel or create a new panel? We're going to keep it on the same. We'll keep it on the same, and then we could change it later if we want. Visible, I'm going to keep that checked. The color though, since it's a slower moving average, in other words, it takes more data to calculate. It takes 20 days instead of 8. It's going to move slower. It's going to change slower because it's averaging more data. That's just a fact of math. So because of that, I'm going to make it not red. Red is fast. Red is hot. I'm going to make it blue, right? So blue is a little slower, and it won't conflict with the candle color, right? It won't conflict with my candle. We'll do medium blue. That sounds good. Medium blue. All right. So everything is set. I'm going to hit apply in OK. And now it's added that, well, I didn't change the width. Which is okay. We could change that later. It's still 1, whereas the red line, the width is 2. And again, we're trying to make clean charts here. So I'm going to ask the question to myself: would I rather have it? Would I rather have it be twice, the line twice as thick, or not? And just looking at this, I'm thinking I could handle this red line being 1. So I'm going to double click again, and I'm going to go ahead and change it. EMA. Width is 1. And I know this is, I'm going a little slow here on purpose. Again, though, I want to add a really, really clean chart. And so now, and if the red is too much for you guys with respect to the maroonish or fire brick red candle, change it to another color, right? Change it to another color. Change it to something that looks better on your screen. For me, this is fine. I can see it really well, and it really gives me a really good picture. So again, we have two moving averages, and sure enough, we have a moving average cross, which did its job, right? The fast moving average crossed below the slow, suggesting a direction change, which sure as heck we got. Now, again, this doesn't always work. These crosses don't always work. They seem to be work a little bit better on a longer term chart than a shorter term chart, but it's a technique that a lot of traders will use. Now, I could move these moving averages to another panel if I wanted to pretty easily. So you could see the numbers and you could see the crosses off of the actual candle. But for me, I kind of like to see where price action is in relationship to the EMA and the SMA in real time. Okay, so we added that, and that, again, this is daily chart analysis here. Now, the other thing I'm going to add to this particular chart is a drawing tool. So, and in particular, I'm going to add a what's called a Fibonacci retracement, right? And again, I want to analyze the trend or a segment of the trend, and I want to see where price is in relationship to that trend. So I'm going to go up to that pencil drawing tool. This is the drawing tool. These are all of my drawing tools available. There's a lot of them, right? And we'll go over a couple of them, but let's go to Fibonacci retracement. Now, I have mine customized a little bit, and I'll explain that in a second. So I want to analyze this big trend. This has been a nice upward trend for a long period of time, and then we had a sell-off. I want to see what this sell-off looks like in relation to this tremendous trend we had. So I'm going to figure out where the trend started from, right? This trend started in my mind right here on January 18th. So I'm going to start my fib line here, low to high, right? I'm going to click low to high, and the high wick where the trend ended is up here, right? So what it did is it painted this fib scale, if you will, onto the chart itself. Now, notice my numbers aren't exactly fib numbers. They're a little different, right? Because it's a harmonic fib, right? It's breaking these up into a piano keyboard, if you will. But the numbers are pretty similar. As an example, a regular fib would be 38.1% retracement would be a number. The harmonic's 37.5. So it's really close. Again, and this is a customization I did, and then at a later date, I'll show you how to do it. You could just keep it at the default, though, will be regular fib numbers when you see the default. Now, one might say, hey, Jim, your chart is not very clean right now. You're kind of making it a little bit messy, and you're right. So what I could do is I could highlight that. I could capture the fib, and I could move the anchor points way to the right. I can move the anchor point way to the right, right? I'm still touching that low. I'm still touching this low wick right here in January. And then I'm going to move the anchor point to the top, way to the right. Move it way to the right, right? So now what I've done was I've cleaned up my chart. It looks a little bit better. You have to admit it looks a little bit better because my fib lines are way over here. My fib lines are way over here on the right-hand side. But, the crosshairs, you just use your crosshairs and you can kind of look. And the other thing I forgot to mention is, I just kind of visually decided where the high and the low was using the crosshairs. If you wanted to be precise, right, I can go to this high point, use the roller of my mouse and say, what was the high of that move? It was 33.50, right? Again, just put your mouse on the candle, hold down the middle mouse button, and you'll see the high was 33.50. So I'm going to double click on my fib, and I want to make sure I'm at 33.50. So let's see, where are we at here? 33.06, right? So I want to change it to 33.50. I want to be exact, right? I'll hit apply and okay. It's a subtle difference. You won't really see it very much, but if you wanted to do it that way. And then the same thing I'm going to do for this low, and actually the low wick is this one right here, right? The low wick I have way off. I mean, the start of the trend is right here. So again, middle mouse key, low 63.50. All right, 63.50. Let's double click there. 63.50. Where's that at? 63.50. Well, I was pretty close. I was 63.52 and some change. We'll change it to 63.50. Apply and okay. So now I've anchored my fib to exactly the high in the low that I wanted to anchor it to. So that's kind of clean. Now, the other thing that's bothering me, I don't know if it's bothering you, but it's bothering me. are these labels here on the left-hand side. You can see we have in the black there, we have the price. We have the actual price, right? We have the price of that's moving around in real time. That's mark to market. That's the price of the market. And then we have the blue label, which is that slow exponential. That's that 21 period moving average. And then we have the red, which is the exponential moving average. And I don't need to see that. It's kind of interfering with my right axis. So I'm going to take these off one at a time. I'm going to right click. I'm going to go to indicators again. And when I do that, it shows these indicators that are already configured. And I'm going to go to the EMA, and then I'm going to kind of look for price markers, right? EMA price marker. I'm going to turn that off. I'm going to uncheck that. Just click that uncheck button. I'm going to do the same thing with the simple moving average. I'm going to click that uncheck button. And then I'm going to hit apply. I'm going to do it one more time too. See, they disappeared on the right. I'm going to do it on this RSI. So I'm going to go down to the RSI. And again, same thing. You could take away the price. You could take away the, let's see, price marker as well. You don't have, if you don't want to, you don't have to. But for me, I think it makes it look cleaner, and you could kind of use your crosshairs to see where you're at. RSI doesn't have to be exact, in my humble opinion. So I'm going to just click that off and hit apply and OK. So there you have it. So it's pretty clean so far, right? Pretty clean. I just have an oscillator. I just have a moving average cross, and I just have a Fibonacci extension, right? So this is my base. This is the base of my chart. Maybe your, oscillator is MACD or stochastics or something else, but I'm gonna keep that there as well. So what else could we do here? What other things we could do here? We could right click and go down to properties, and we get this this overall chart property dialog box, and you could change fonts if you will. My panel splitter is red. I could change the panel splitter to a different color. I don't know, lavender sounds good. We'll change it to lavender. Grids, grid lines. Again, you could change the grid line colors as well. And as you go through this formatting process, and I know a lot of people spend a lot of time on charts, the key is to make it as clean as you can with respect to your technical analysis technique, whatever that is, right? So again, you could really, really go to town here and customize a lot of this stuff as well. So I'm just going to hit apply and OK. The only thing I changed was my panel separator. And just to remind everybody, the panel separator, you could just grab and move up and down. You just grab and move up and down. It's really, really, really handy. So that's kind of the basics here. There's more stuff you could add, right? We're running out of time here because we have a really great guest coming up next. There's more stuff that you could add, but just be kind of cognizant, right, of just having too much information. It could cause some confusion and some trouble as you're going forward here. And also remember, the drawing tools could be added and deleted in mass, right? You could delete drawing tools, remove all drawing objects, going all the way down to the bottom, and then you could reset and reestablish them. Because over time, you might add some trend lines, right? You might add some trend channels with the tools and stuff that, after a while, this trend channel is no longer any good anymore. But, maybe you had that in here in the beginning of April. And now it's like, all right, now it's cluttering my chart. So I'm just going to delete it. I'm just going to highlight it and delete it. It's really that easy. All right, folks. Great guest coming up next with Tom Schneider in a couple of seconds here. Speculator Seth is with Tom. We already saw Speculator Seth once this week for the first time on NinjaTrader Live. Simply fantastic. Excellent guest with a lot of keen insights. So stay tuned. We will be right back.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets and access over 40 built-in indicators plus custom indicators all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit NinjaTrader.com to get started today.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets and access over 40 built-in indicators plus custom indicators all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit NinjaTrader.com to get started today.
Welcome back to NinjaTrader Live. I'll be the host of this segment, Tom Schneider, CMT with NinjaTrader. And we like to call this segment Traders Workshop. We showcase NinjaTrader ecosystem partners. And today we are so fortunate to have back on our show Speculator Seth. Speculator Seth. Seth, how you doing?
Good. Thank you for having me back. I really enjoyed being here on Wednesday, and we got a little bit more time to talk today. And now that all the craziness is kind of past us, so
just in time for the weekend. Yeah, I really enjoyed our talk on Wednesday, and is looking forward to kind of picking up where we left off. But we can even maybe do a couple things today. I think is first thing is maybe we review what you were saying on Wednesday, because that press conference certainly was interesting, and it kind of fit the script that you were laying out.
Well, yeah. So let me pull my charts up here. So I'm sharing my screen. And let me pull up like kind of my more higher time frame charts. So this is
sure
a 30-minute chart here. I just have a volume profile on it, mostly because I think the volume profile looks cool. But so remember that one of the big things that I was talking about for the Federal Reserve meeting was that while everybody is really going to be focused on what Powell is saying, that there's also really important things going on in that they were, announced that the Treasury refunding amounts and which tenors that was going to come out in. They announced a bond buyback program as part of that. And then as part of the release, as we expected, they did change the rate of the balance sheet runoff. So that's changing the liquidity and the actual orders coming into and out of the treasury market in particular. So something that you're seeing here on this chart, this indicator that I have here down at the bottom, this is an indicator that's part of my paid indicator suite that you can get at speculatorseth.com, that is just showing me what the yield curve is doing. This is the 2 and 10 year spread. So thing you want to keep in mind with the spreads is down is flat. Okay. Up is steep. Okay. So you can see that during that Federal Reserve meeting that we did get steeper.
Right.
So the market did read that those changes and so forth. And it, we did expect them to reduce the runoff of the balance sheet, but it was like more than they expected. So the market definitely reacted to that. And he did say a lot of interesting things. One of the things that kind of, two things that kind of stuck out to me, one thing is, I've been paying attention to PMIs a lot lately. We had a PMI today. We could talk about that in a second, but PMIs are like one of the most leading indicators that we get because it's a purchasing manager's index. So things like there's a big focus on non-farms, and that's for a very important reason because that gives us kind of like the most holistic picture of what the labor market is doing. But in terms of leading indicators, PMI is one of the most leading things that we have. And it's kind of been signaling stagflation. And he actually addressed that. And he's like, well, look, this is not like the 70s at all. And that's totally true. Probably the words that we have to work with here probably aren't very good because it's like, well, okay, if business activity is declining and prices are still hot, that to me is like stagflationary. But clearly what we're having right now is maybe just more of a reversion to the mean, right?
So one counterpoint to that, Seth, I will say he did kind of have an attitude about stagflation that a lot of people don't agree with, which is if you calculated inflation like they did in the 70s, we're not at 3%. We're much higher.
We're much higher.
So stagflation isn't just about inflation, but the inflationary part about it. If you're going to go back to the 70s, let's use the same measures. And by we're in double digits according to the 70s measure of inflation versus, how many times have they revised it? Maybe 3 or 4 times since then. And it's, every time they revise it, it revises down. So for whatever reason, right? They may have very good reasons. So the stagflation part, maybe the stag part is dismissible, but the inflation part might not be.
Well, yeah, for sure. So, I mean, the first thing is that like, we can see the numbers going in a certain direction, and it's not necessarily a positive direction for the way that the Federal Reserve is going, or would like to see. Like that's very clear. Of course, you got to give it more time. Maybe it's not a big deal. It's very important to dig into how these numbers are done, and it is an important thing to note that like the measure of inflation has changed. Now, there's very good reasons for that. I think one of the big changes that is starting to become really relevant because I can't remember the guy's name, but he used to be one of the big economic guys under Obama, and he's been doing some studies, and he was showing that like things like the increased cost of borrowing that is caused by higher interest rates used to be factored into the inflation measure, and it's not anymore. And totally makes sense to me that like, okay, if you're trying to decide what you should do for Federal Reserve policy, then you would kind of want to take that out. Okay. But in terms of like expressing how expensive things actually are for people, it's not so good. Right. So those are important things. I think that the measure is better. Like they made good changes to it, but it does make it hard to compare because you can't see what that number should have been using today's methodology.
Right.
But either way, it's very clear that we're seeing like business activity decline. Not necessarily like we're going to have negative GDP, but it's declining and price pressures are still kind of there. So, like going back to the chart and what happened today, okay, they really liked the non-farms employment report being much weaker than expected. First time in a long time that we missed. But then that PMI came out and the prices paid was still very, very hot. And that, this is not good.
Well, so to the point of the NFPs, the non-farm payrolls, it kind of takes care of that equation, which is you either have to raise rates or the labor market has to weaken, one of the two, right? To kind of say inflation should be trending in the way we want it. They don't want to hike rates. We know that. I mean, he was asked point blank, and he didn't really answer it, but he answered it by not answering, saying we didn't talk about it. Okay, great. So the expectation is a weaker labor market. How much you've been under 4% unemployment for quite a while now, which is great.
It's super low historically, right?
Right. So, I think the non-farm payrolls took care of that part of the equation to say, well, see, we don't really have to raise rates because the labor market is going to weaken a little bit. So they can get back on that idea of rate cuts, which is, I think, what we saw today.
Yes. So for the team soft landing, which really, if we want what is best for the economy, we should all be team soft landing, right? That's what we hope should happen. It is a very big positive because for the last month, it's kind of been trending the other way that like maybe we're getting no landing and that's kind of a problem. But, labor is, employment is a lagging indicator. So we're finally seeing these things that we've been seeing in other measures come out into employment. That's like a really, really good thing. But the question that I have now and the thing that I'm going to be paying attention to is like, okay, but why is it actually happening? Because this could just be the reversion to the mean and the interest rates are high and so it's coming back to what it should be. But there's also kind of a hint in some of these PMI reports that it's the higher prices that is kind of stymieing business activity. And if that's the case, that's when you start to get into that stagflationary scenario. So it's not like stagflation yet. The problem is, and it's maybe not even the most likely scenario, but the problem is that you fall into those sorts of things very, very quickly. They come on you before you know what's happening, right? So that I think is a little bit more of a concern going forward, even though I think on net, I think that there was really good progress in the data. At the very least, I would say that this is the first time in like almost a year where I felt like all of the data made sense,
Yeah, exactly. And you just wonder, and it's nothing we can really prove or whatnot, but you wonder what would have happened if the non-farm payrolls report came out at 10 and the PMI report came out at 8:30, right? Because volume came in, right? There was more volume at that 10 o'clock report than the 8:30 report, which blows my mind, right? Because you always think, unemployment, that's going to be the biggest release, right? It's part of what the Fed is trying to promote, employment, PMI, like you said, it is kind of more important than we think it is. Although there is a reason.
Well, right now it is,
right? Because those inflationary pressures could be showing in, like you said, it's leading. It's what the purchasing managers are paying now. That filters through to the rest of the economy in the future, right? So, that's why it's kind of a canary in a coal mine, if you will.
Well, so let's kind of analyze this a little bit. So if I come back over here on my chart and let's go into some of my 1 minute charts. So let's analyze it on the treasuries. So my chart might look a little complicated because I kind of have this model to try and show market maker positioning, but just ignore that. That's not really relevant in this particular case. So the big thing that I'm always going to be paying attention to is the cumulative delta, which is just all market buys minus all market sells. Okay. Yes. The imbalance between market buyers and market sellers is one of the strongest indications that we have of informed trading and what informed traders are thinking. Okay. Mm-hmm. So when I look at the overall volume, something that I kind of notice is, okay, so here was all of the noise that we had at the beginning. And then despite us kind of falling back here, cumulative delta was flat to up. Now that makes sense because what will happen is all of the liquidity back here is kind of like disappeared, but like the liquidity above it is still there. Those people are possibly still waiting for fills and so forth. So it's really easy to fall back into that hole. That's why I really want to look at this cumulative delta. So it's interesting that we had this move up, and then after the PMI and everything, that almost completely retraced. So even though we're a little bit higher in terms of price, in terms of like cumulative deltas, that move retraced.
Right.
Now, on this one, I didn't see as much activity in after the PMI in the treasuries, at least. Okay. It was kind of like they had their knee-jerk reaction. The robots, I think, bought it because they saw that the number was weak and don't weight the prices paid as much. And then it kind of fell a little bit later. Right. Now let's go and look at that in the equities. We'll look at this chart. This is a 5-minute chart. So in the equities, it is a little bit different, right? Like when I look at how much traded off of the actual non-farms versus, well, I guess it came in later. One of the things is that there was a lot of volume here, but like, look, cumulative delta was actually flat. Yeah. So I'm not quite sure what I can make from that, but that's just one of those things that you kind of have to keep in mind is that like, okay, so you have a move up, that kind of makes it a little bit easier for them to move back down. And it's really important. What the pattern that I'm always looking for is like, if you have a move that's going up like this, right? Mm-hmm. And then something else happens and you go down and you'll end up lower often because of that hole. So basically, if somebody comes into the market and buys, like, let's say 100,000 contracts of something, right? And then they immediately turn around and they sell 100,000 contracts of something, because of the way that liquidity works and everything, you're actually going to end up lower. Like that second order has more impact because of the damage that it did to that liquidity. So that might be part of what we're seeing there on the non-farms. And that's where it's really important for us to kind of try and separate these things, right? Like these were the orders. The orders don't necessarily correlate 100% to what is the economic situation. So we kind of have to analyze those two things separately and see where they correlate and where they don't, and just kind of try and sort the puzzle out.
Right, exactly. I look at cumulative delta as well, and when you have such extreme days, sometimes it's harder to see the pattern. Let's say when you compare price to cumulative delta. And what we would expect is on an up move, we'd see more buyers. On a down move, we'd see more sellers. And for the most part, I think that happened here. It's hard to see. There wasn't really a lot of divergence. I look at it like when we find a new level, if you just chop out that bit that moved up and just paste it back to where it was, kind of you have the same behaviors, right? So are we accumulating at a low? Are we distributing at a buy? Or at a high, I should say. And if we're not seeing that, that sets up for a squeeze possibility. Now, it doesn't always happen. And today, I really didn't see that too much.
Well, and that may just be it's Friday, right? Like the flows tend to die out early on Friday. So after about 10:30 Eastern time, it kind of looked like a lot of people left. One thing I will say, I just shifted my chart back over to the 30-minute chart, is like some of these moves back here, like especially that one, which was the CPI, I believe, was probably the biggest move that we've had in the last month. So I'm going to be paying real close attention to that CPI next week, right? That is something I'm not sure that it would necessarily make the market, but if you get another hot CPI, that's really, really going to crush them. I think it's less likely this time. I'm hoping that CPI is more in line with expectations, But that's kind of the concern, right? Is that inflation is accelerating or doesn't come back down, and so they can't bring interest rates back down. And you can see that was like the biggest mover in the last month. It may be a big mover again. It may be a bigger mover than today or the Federal Reserve meeting.
Right.
And it's also the Federal Reserve meeting was kind of confusing because in equities they completely retraced that one. That
Right.
really reversed after he was done talking. So
Well, to your point about the CPI, right, and that was a momentous, right? A lot of times we see the roller coaster. We saw just one up and one down. But to your point about CPI, I think you can go back to the two previous CPIs. You can see it right here on the chart, right? Not as momentous as the last one, but those big moves down. And I think
that was maybe this one.
that one right there, yeah. And kind of what's happening there, I think, is we're seeing an increase of 0.1%, right? And you're thinking, well, 0.1% is pretty much spot on, right? And that's that's easy to say that with any number, but it's the accumulation, right? So if it's 3.0 and then it's 3.1 the next month, it's a road bump.
Well, yeah, totally. I mean, a 1/10 of a percent in CPI is a big deal, generally speaking. Yeah. So
right, but it's easy to wave away if it's one, right? Like, okay, from a maybe a talking head, Bloomberg, MSNBC, whatever news, like, okay, it spiked up. Yep. But it didn't spike. It wasn't a spike. It was just an increase. But we've had how many of those? We've had maybe 3 of those. People like you and me and maybe other analysts or other traders, you start to get concerned. And then, you're right. Next week, CPI becomes that much more important because that trend is in place. If it were flat, okay. CPI is flat. It's holding at 3. We're not there. We got to get back to 3 before we even think about 2. I was interested about his comment about, like 2, no problem. 2%, no problem. We'll get there. Like, okay, well, you're probably the only one that's as sure that we're going to get to 2%. And we might get there, but my kids might be grown and have their own families by then. I don't know.
Yeah. Well, so to add to that, I think that the timing of it all is really important. So the first thing you got to realize if you're a new trader and this is like your first year, action in the summer is completely different from the rest of the year. Like so much liquidity disappears right now. Right. I'm seeing 3,000 to 4,000 contracts per price in the treasuries. But in the summer, there's usually 1,000, if not half that much. So that's a big change, and a lot of people just go on vacation during that time. So this next set of reports that we get in May is kind of end up being important and have much longer lasting effects over the summer, and then on top of that, so another indicator that I have that you can get from my website is this synthetic dollar index, right? Because it's very hard to get dollar data. Sure. You have to pay ICE for it. It's like $100 a month, right? Well, what this does is it just takes the FX futures and it calculates the dollar index with the data that you might already have. And it actually ends up being kind of a complicated thing to do in code, especially to have things like, keep track of it live versus historical. That's why these bars back here are gray. Okay, but you're seeing the dollar make these like crazy moves. The dollar has been relatively high. It wants to come down. I mean, look at how far it came down there, all the way to 104, and that move completely retraced, right? And then if I come back over here, so I also have it on more of a daily chart with the Japanese yen. Mm-hmm. I mean, look at the crazy stuff that's been going on the yen. Can you imagine? Because they put all of this money into trying to save the yen, like they're doing currency intervention over there. Can you imagine if that non-farms report had been hot, right, and the Japanese yen plunged there, right? So they're kind of at an inflection point. If some of these next key points like CPI end up being bad, that could have a lot of reverberation effects. So.
Right. And we know the Bank of Japan reluctant to raise rates, right? They're way behind the curve on that. Not just in general, but also in terms of the inflation cycle that we've seen in the last 3 years. But you're right. This is just kind of coincidental, I think. Maybe you say that, well, there's a reason they're doing it now is exacerbated by everything else that's happening, in the world. But this was really fortunate, I think, for
Yeah.
the Bank of Japan.
Well, this move right here when they were going down,
Oh,
that was scary. Because it started on the Friday, and then they were going down pre-market on Monday. That was terrifying to me. I can only imagine what the people actually on the front lines are thinking on that one.
And their step in wasn't enough, right? I mean, when they initially started buying, it really was more of a belief, a change in belief, a change in attitude, whatever you want to call it. That was certainly good, but they didn't do enough, and you see that pullback until they did it again. I mean, that to me, the fact
they're going to have to step in many times because there's kind of an upper limit on. So let me teach you something here. Well, we don't really have enough time, but there's something called the square root law. So there's actually an upper limit on how much impact they can have and they move it up. So if they want to have an impact like that, they're going to have to do it over several days and do many interventions. And I would keep an eye out for that.
And it's going to be more they'd have to do more each time. Right. Yeah.
Yeah.
Exactly. But they've opened that door now, which I think is a good thing. I mean,
well, it looks good for now, so we'll see. Hopefully it works out for them.
Right. So, we're going into CPI. Any thoughts about CPI in general in your estimation, other than what we've talked about?
Yeah, so I haven't. I usually don't get like the really good reports about what the numbers might be until the day before.
Okay.
I expect it to be close to in line, but we'll see. We definitely have like all of the context so that when it comes out, we can kind of have a better framework to interpret what they do. But the biggest thing is that it's going to be a big day, if not bigger than today's non-farms and Wednesday. It's depending on what the number is, of course, but big event to look at.
Which is kind of interesting because we've learned lately that it isn't as important as, let's say, PCE, right? Fed looks at PCE more than CPI.
Yeah.
But CPI has always historically been that bigger number. So that's what we're used to looking at traditionally.
Yes. Well, and PCE does contain some of the same components. So
right. And what day I'm trying to see what day that is. Is that next week or is it the week after? It might be the week after.
Yeah, you might be right. Let's see here. I'll double check really quick.
It's actually the 15th. Right. Yeah.
Right?
So it is. We've got another week, and see, I think that could work to someone's advantage, right? Being that much farther away from Powell's meeting, right?
Yep.
So we get a little more cleaner look. We're not as biased.
Yeah. And they're going to have a lot of room to, if funds need to reposition themselves and things like that next week, that's going to be a good opportunity for them to do it. So.
Right. Do you follow the Fed speakers?
Oh yeah. I mean, I read pretty much everything. I don't read the full speeches. I don't have that much time on my hands, but I do follow. We had Goolsby speaking today. He's probably the most dovish one in there right now.
Yeah.
I didn't really hear anything too new from him. We'll see how it goes. As of late, we haven't been moving as much on Fed speakers. Most of what they see isn't surprising to me, but at some point they're going to come in. We'll see.
Yeah, the surprise to me was Raphael Bostic was not the first one. Usually he jumps on that soapbox real quick and has his opinion. But
on that one, he kind of had a study about things that he kind of wanted to get out. So they really gave him a lot of attention there for him and Kashkari.
Right.
As kind of like trial balloons to see how the market reacted to that. And now that's kind of passed. It kind of seems like we got a digest mode right now. So
Yep. Totally agree. Well, Seth, thank you so much for coming on. We've run out of time. This time always goes by fast anyway, and with you it just goes by faster. So appreciate you coming on. How can people find you?
Yep. So you can find me Speculator Seth everywhere. I have those indicators. You can go and find those at speculatorseth.com. You can download it, try it free for 2 weeks, and then it's only $100 for the package. So it's something that I think everybody that has NinjaTrader could benefit from having. Like, how do you trade without knowing what the value of the currency that you're trading in is doing? So that's why we have the dollar index, those sorts of things. So you can go and check that out. Or, my YouTube channel, Speculator Seth. I have a video about momentum that explains a lot about the way that the futures market works and kind of some of the weird things about why does technical analysis work or not work. I think it kind of clarifies some of that stuff with how momentum strategies actually work. So that's definitely worth watching.
Awesome. Thank you so much again, Seth. And we'll do this again in a couple weeks. In the meantime, have a great weekend. Are you doing anything for the Derby? Do you look for the Derby?
No.
No.
Well, I live in Utah. We maybe have one racetrack around here. I'll be doing woodworking over the weekend. So
awesome. Well, I hope it's great. And up next, we will have Ryan Krebs join Mike Burke for the midday wrap up, and we'll be right back.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers, building trading indicators, and more. Visit NinjaTrader.com to get started today.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers, building trading indicators, and more. Visit NinjaTrader.com to get started today.
Okay, we are back with our midday wrap up. I'm Michael Burke. Today I'm joined by Ryan Krebs, who's the Business Development Manager of North America for NinjaTrader. That's a big title, Ryan, but basically what do you do for Ninja?
So, well, first off, thanks for having me, Mike. Good to see you again. So what I do is I work with different businesses that decide to create trading products or offer different trading services to the NinjaTrader user base. So today was planning on talking about a little market profile. It was kind of one of the topics that that Jim and I had discussed last week, so thought it would be a little relevant there at least.
That sounds good. So this all takes place in the ecosystem, correct?
Yeah, that's correct. So for those of you out there that aren't familiar, the NinjaTrader ecosystem is our home to all of our vendors. So approved businesses that have gone through our process and have, like I said, created trading products or offer like trading education and different services that can help traders, maybe like alerts or trade ideas, things like that. So just a place where traders can go and find some cool new tools and ideas out there in the markets to use along with NinjaTrader or just to use along on the side.
So, this is really a powerful feature of NinjaTrader, right? The ability to have hundreds of these third-party, traders, developers, experts in this field, and you can tap into that and take their knowledge and see it on your charts. You can subscribe or buy an indicator or a strategy. And I think that adds just another level of depth that really traders can tap into and really help their trading.
Absolutely. We want to be a real trusted source for where people can go and find those types of things, right? And so the ecosystem just continues to grow, and we want to continue to invite people to reach out to us if you think you have a product or a service that would help our community. At the end of the day, we want to help people get better at trading and provide them the tools necessary to do just that.
That's excellent. So Ryan, tell us about the two vendors you want to talk about today.
Yeah. So the two vendors are Code for Traders and Bell TPO. Both of these businesses are pretty much, in the market profile world. A lot of their trading and a lot of their tools are centered around market profile tools. So just give you an idea for those of you out there that aren't familiar with market profile. It's a tool that plots volume of transactions at each and every price level. So the result is a histogram that shows traders how supply and demand interact. It can be used in short and long-term analysis, and market profile helps traders to identify key price markets or key price levels in trading markets. So it's a very versatile tool. A lot of people are using it out there. It is something that does come with a lifetime license. We do have some market profile tools, but the beauty again of the ecosystem is to kind of get a little bit of a different idea from these businesses and be able to utilize their tools in a similar way, right? And so the first one I want to talk about is Code for Traders. Code for Traders has been a vendor with us for over 10 years and is one of the longest partners that we've had. Bernard LaRouche is the CEO. He is an experienced trader and developer from Canada, has his MBA and CFA, long career in the industry, working for pension funds. He actually worked for an exchange in Canada as well and was a CTA in the early 2000s. After that point in time, created these tools, these volume profile tools to offer traders. At that time, NinjaTrader was not really in the market profile space. So Bernard was actually the first person to kind of bring market profile directly to the NinjaTrader platform.
Yeah, that is well. We show a little bit of market profile volume at price during the live stream shows, but I agree with you. It's always great to get a different perspective, see how other people look at it. You eventually come to your own way of using those tools, but I agree with you. It's always good to have additional choices.
Yeah, I think by being able to take a little piece of all those different types of tools or even types of education that you can learn from a different provider of these tools, I think can really benefit the trader overall.
I agree.
So the second, well, I'll just mention this too, that there are 4 different plans that Code for Traders offers, ranging from 80 to 175 bucks a month. These tools can be used with an NT account, any prop firm trading that you're using as well. To learn more about their products, you can reach out to them directly at info@codefortraders.com. The next one wanted to discuss with everybody is Bell TPO, another vendor that has really been with us for a long time, coming up on 8 years now, so since 2016. They don't only just provide the trading tools and trading software to add on to your Ninja charts, but also have a lot of education and a knowledge hub that can be really beneficial to the traders, like we were discussing, Mike. The knowledge base is free. It's just available on their website, so you can go there and kind of learn the basic vocabulary, I would say, that goes into learning market profile. So like you had mentioned that, like the VWAP or the volume weighted average price. Some people, it's just a good way to check out all the vocabulary there and kind of take a deep understanding to what this market profile is really trying to accomplish. So yeah, like I said, outside of that software that they provide multiple different levels on, their education is really a key aspect in their business as well. Tons and tons of videos that you can dive through, all available on their website. So anybody that's even just getting started with volume profile, this is a great resource for you to be able to use and access quickly and efficiently. They also have courses available. So if you are looking to kind of get into it on a more in-depth level, just another thing that they offer and that you guys can check out. So 7-day free trial is available. At belltpo.com. I encourage everybody to check that out. And there are multiple other users, multiple other vendors that offer market profile. It is one of the filter results on the ecosystem website. So if you just go to the ecosystem along the left-hand side, you're actually able to sort by market profile and see all of the different vendors out there that have these types of tools and resources for you to learn from.
That's outstanding. And definitely, if, to get the most out of NinjaTrader, you should have a favorite linking to the ecosystem site so you can kind of always see what's going on there. Ryan, anything else you want to talk about?
I think that those were the only 2 that I really wanted to highlight. Like I said, typically we're talking about newer vendors that have just come on board, but still wanted to give a shout out to some of the businesses that have really been working with us for a long time. We really do appreciate the opportunity to partner with each other and work together to again help traders reach their goals and things like that. So those were the only 2. I know you wanted to get to a couple charts and wrap up here in the afternoon, so I'm happy to stick around and chime in if I can.
Absolutely. Let's look at some charts. And just wanted to finish up by saying, that that ecosystem is such a vibrant community. It's a great part of being a NinjaTrader client. I hope everyone will reach out and take advantage of that. So Ryan, I am going to share a couple of charts here. Let's start off with the 5-minute. This is a 5-minute. Oh, I'm sorry. This is the daily ES. So today, yesterday, Thursday after FOMC, pretty interesting. We had a strong up day yesterday, bouncing off that 550 level. Today, we are again, another good day up. Right now, we are up 1%, 51 points on the E-mini. We're crossing the 21 SMA. It looks like, we're at an inflection point. If we can break out above, that 5150 level, maybe we'll see some higher prices.
Absolutely. Yeah, I'm definitely seeing that on the chart here. Can we go to a shorter time frame as well?
Yeah,
Maybe?
let's look at the 5 minutes, see what happened today.
Yeah.
So there's that big news bar. Pretty amazing. When it first hit, I thought, this isn't that great of news. Employment situation's kind of declining a little bit from where it's been, but bad news was good news today.
Yeah. Looks like we're definitely struggling to break out of there. A lot going on up at the top of the chart, trying to break out, but not quite getting there.
Yeah, I mean, a couple of things, right? That you'll notice that little black triangle heading to the right below the triangles, blue ones heading up. So that tells us that we closed near the high yesterday. So whenever that happens, there's usually a little bit of follow through, and I think we saw that today. Pretty good follow through today, and but yeah, you're right. That black dash line is the VWAP, and we are just kind of stuck on the VWAP. We've been stuck there since the opening range, and I think it has maybe a little bit to do with Friday. Everybody's trying to break away a little bit early today, but I'm having a little bit of trouble with my video. Let me get that on. There we go. So yeah, it's interesting. Let's take a look at. So let's take a quick look at crude oil. So crude oil is kind of an interesting market. This is the 5-minute crude oil. This market has really surprised everybody. We dipped below 80 a couple of days ago. We've stayed below that. The inventory numbers are pretty good. We've been adding to inventory the last few weeks, so maybe that's putting some downward pressure here. But right now we're testing the lows of yesterday.
Okay. Yeah.
Can you see that?
Yeah, no, yeah, I can see that. Yes. Sorry, I'm also having a little issue there. Okay. Yeah, no, it's good to know.
Yeah. So, if you look at the volume here, obviously it's heading into lunchtime. We usually see volume kind of slow down at lunchtime. And that's what we're seeing right here is the market. Again, the commodity traders usually go home a little early. So, on Fridays, you see that volume really kind of spike down toward the end of the day, and then it kind of meanders sideways. If we look at daily,
it's always dangerous to hold something over the weekend as well. So we're probably seeing a lot of people getting out of there before the weekend, like you said.
No, that's an excellent point. Especially a market like this, crude oil, right, which is very news driven. If you go long or short crude oil on Friday, anything in the world can happen over the weekend, and you're stuck in a position that may not be the position that you want. So this is what I was mentioning, Ryan, that we've kind of been in a downtrend for the last week, and we dipped below that key 80 level on Wednesday, and we're still heading down. The blue line that you see there is an 8-bar Keltner. So I use that as kind of my channel, and we've been below that channel 3 days in a row. That's very bearish for this market.
Yeah, I'm not actually very familiar with that. Would you mind sharing some info on that with me?
On which one?
The channel? I forgot what you called it.
The 8-bar Keltner. So Keltner channel is an indicator that has a center moving average, and then it's an 8-bar moving average, and then it's 1.6 ATRs on both sides of that moving average. So basically it creates like it's like a Bollinger Band.
Okay.
But instead of using standard deviation, it uses average true range.
Awesome.
So it's
Very
just
cool.
just another kind of way of measuring when the market's overbought or oversold. Okay. But when it goes below when the prices actually close below that for several days, that could be an indication that this market is much weaker than we think, and that we could be heading to the downside.
Right.
Is there any markets that you want to look at? Anything in particular?
I'm always interested in checking out gold.
Let's check out gold. So this is the daily chart. We've been kind of in a channel, sideways channel. We dip below that orange line, which is a 21 period moving average. We've been below that. This is a market that kind of trades in between big even numbers, like between 2,300 and 2,400. Sometimes the middle number, 2,450 or 2,350, can be a good support level. Right now, we are right at 2,300, and you can see that we've held that support level for the last 4 days. So that's a pretty strong level. It was a strong level back in early April. So, but if you look at this, we're kind of just moving sideways. There's really not a trend direction here.
Yeah, sideways now for, what is that, a couple of weeks?
A couple of weeks now, yeah. So are you bullish or bearish gold at this point?
Yeah, I don't even know if I would be interested in trading this at this point. Obviously, like you said, though, 2,300 is showing a lot of support there. We've seen that multiple times, and going back a few months, or how long ago? Is that a month or month and a half?
Yeah, about a month ago, we were at that level.
Yeah, so I mean, seems to be like a good point of support. Maybe would be interested in getting long at around 2,300 in that case, with a little bit of a stop loss in there, maybe where your Kettler channel is. Something along those lines. But that'd be all I'd be seeing. I would let you make that decision.
Oh, I think that's a good call. Yeah, I definitely think we can bounce off 23 to the upside, and just in case we don't, we put in a nice tight stop just so that we limit our losses. I think that's a great trade idea. Let's look at. So one of the things that came out of the FOMC this week is that there's probably not going to be a rate cut for a long time, probably not till September or October. At least that's kind of the impression that Chairman Powell gave. So in everyone's mind, then what that means is that bonds will probably go down because of that. Interest rates will go up, and that was kind of the consensus feeling in the market. But we've actually seen the opposite happen. So this is the 10-year notes. And the last 3 days, we've been moving higher. Interest rates have been moving lower, pretty much the opposite of what everybody thought.
Pretty good move on that as well.
So for bonds, you're absolutely right. I mean, you normally don't see bonds make such a big percentage move in just 3 days. And in fact, this has moved the 10-year yield futures from 4.7%. We're under 4.5 today. So that's a pretty substantial move in the interest rate on 3 days in the bond market here. So, and the other thing that happens when we see this kind of action in the bonds, interest rates go down, the dollar goes down as well. So all the major market currencies are higher today against the dollar. Again, based on this, everything's so interconnected, but bonds seem to be the driver of a lot of markets.
Yeah, a lot of correlation with the treasuries for sure, and you can oftentimes use those to also give you ideas in other markets, like you were saying. So
absolutely. So typically, we were just looking at gold. Gold is down a little bit today. But that's typically, that's the kind of stuff that you see when the market is weaker. Sometimes commodities can go up. So, when today gold went down, the dollar is down, that's something that normally doesn't happen. So you start thinking, which one of these is weaker? Is the dollar weaker against the gold, or is gold weaker against the dollar? So you're right. They're all so interconnected.
Most definitely.
So Ryan, thanks for being with me today. I really appreciate it. We're running out of time here, but we will do this again real soon.
Absolutely. Thanks, Mike. Have a great weekend. Good luck with everybody on their trades this afternoon.
Thanks, Ryan. That's awesome. So coming up next week, we have on Monday, we have Mike Arnold. He'll be talking about support and resistance with Tom Snyder. And then, I'm sorry, Mike Arnold will be here with Jim Cagnina. Sorry. And Julie Wade will be back with us with Tom Snyder, talking about how we can use volatility to help guide our futures trading decisions. All right, everybody. I want to thank everybody for being with us all this week. There's no bars closing today on Friday. Remember, all of the trading ideas, all of the topics discussed are for demonstration purposes only and are not recommendations. Active trading is not suitable for everybody. You'll find additional disclosure information on the NinjaTrader website. So thanks everybody for being with all of us today. From all of us, thank you so much. Have a great weekend. Good luck in your trading, and we'll see you Monday morning. Bye, everybody.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.